Everybody, Uneducated Economist here. All right, so before we get started on today's video, I thought I'd just give you kind of a quick lumber update. I was talking with a gentleman who is in the logging industry, and I was asking him about what he is experiencing right now, and he was talking about the quotas going to the mill in our area and how they had their quotas cut back dramatically. Talking about 4 different sites that they were cutting trees from, and hauling them to the mill. Typically, they would run anywhere from 12 to 15 loads per day per site. And right now, they have been cut back to 20 days or 20 loads per day for all 4 sites, meaning that they could basically haul 5 loads out of each site per day. And considering that they were doing anywhere from 12 to 15, that is a dramatic cutback. I mean, we're talking better than 50% cutback on the amount of wood that they are hauling, not only to the mill, but also going for exports as well. So it's a dramatic drop in the amount of wood being cut and hauling to the mill, and the mill is also in curtailments, and that's the obvious sign of it, is when they stop buying wood from the loggers. But also that is that curtailment is now also going into creating a shortage of the wood burning pellets that people use for heating their home. So it's obvious right now to me that the curtailments, that the distribution of lumber, logs is all depleting. All that inventory is coming down, and it's coming down, in my opinion, quite significantly. Now, again, I've brought this up many times that if we have any kind of churn into the home builder sentiment where that turns positive, I feel that the level of inventory that we are experiencing, or at least the cutbacks and the curtailments that are taking place, is not going to leave a whole lot of room for distribution out there because the inventory levels are so tight. So if it's a significant pop in the home builder sentiment, it's going to drive lumber prices right through the roof. That being said, lumber prices are falling right now. So if we go and look at the lumber futures, I mean, they're trading down around 350 per thousand, which is a really low price considering the 1700 per thousand that I had peaked out at. I mean, we're like 1300 per thousand under its all-time high. And mills really just don't like to produce at this level. They want it to be a little bit higher than this. Somewhere around 500 per thousand would be a more profitable area for them. So that's what I'm experiencing right now, coming from the loggers. At least this is, anecdotal or whatever. But I'm in the middle of farming, or of lumber country, timber country, right? And they have a lot of tree farms around here. So if it's happening here, probably happening in many other areas as well. So anyway, what I really wanted to talk about today was this speech coming out of the Federal Reserve. This is really pretty interesting. The title of this speech is "The Innovation Imperative, Modernizing Traditional Banking." And very interesting timing on this. I mean, this came out March 14th, so it was just yesterday. And considering the bank collapse that we had experienced just recently, again, this is pretty interesting timing. Now, I'm not going to read this whole speech because it is quite long. But one of the sections in here I thought was pretty telling of what we can expect coming into the future, because in this speech, I mean, Michelle Bowman is pretty much talking about everything that the Federal Reserve plans on doing here going into the future, as far as creating a more efficient monetary system. I mean, I guess that's the easiest way to explain it. But anyway, one of the sections in here, right? Crypto asset activities. Right? So people keep talking and wondering about whether or not we're going to go to a central bank digital currency. I don't think there's any wonder at this point. It's just a matter of when, not if. And this section of the speech is actually pretty telling when you think about it. I mean, I guess probably, like, for me, the biggest thing that I am kind of looking at is how it is that the Federal Reserve is going to deal with the crypto assets that are out there. And obviously there's a lot of regulation that's gonna be taking place in that. But something that I really am trying to kind of wrap my head around is the central bank digital currency, like the actual, like, Fed Now coin, or the Fed coin, or the Fed Now program, or something. If that's what's going to be used, or if it's going to be stable coins, because they mentioned stable coins in here again. And that's one of the few things that I see them mentioning over and over and over again, is stable coins. and the regulations and how they're going to deal with those. And it makes me wonder, is just like, are these stable coins really going to be the de facto central bank digital currency, or at least a type of it? I, I don't know if it's necessarily going to be like a central bank digital currency, but I think you kind of get the idea behind it, that if the monetary policies will transfer through anything that is basically tied to the dollar. So if another nation trade or has their money backed by the dollar, and it's like an even trade, like they pin their currency to our currency, whatever monetary policies that are taking place within the Federal Reserve will transfer through the dollar into that other currency. And so this is really where I get to wondering about what it is that the Federal Reserve intends on doing with these stable coins out there. And if that's like, because you think about it, if the stable coins have already built the distribution, like the network already, right? If it's already sitting there, then you could just deal with the monetary policy like you always do, and it would transfer right into these stable coins. You could still take the cash out of the system. You could still do all the things that they are intending on doing. Now, I'm not saying that's the case or what's going to happen, but when they bring it up as many times as they do, it just, it just leads me to believe that might be the way to go. I mean, just listen to the way they talk about it. Crypto asset activities remain an important focus for the Federal Reserve and other regulators. While some banks continue to explore offering crypto asset related products and services to their customer, the extreme volatility of these assets creates significant challenges for the banks. These assets are also vary widely in terms of their structure and the markets for trading, and whether they are backed by any assets. Until clear statutory and regulatory parameters exist to govern these types of assets in the exchange on which they are traded, I think some of the uncertainties about how the banking system can engage in crypto activities will remain unsettled. So, I mean, it's not like they're denying this, right? I mean, this is happening. This is on its way. I I don't know, I mean, exactly how it'll end up like looking. But if after reading the speech, and I'm going to go over this speech a little bit better after I kind of break it down and highlight some areas, and I just got this speech earlier today, so I'm just kind of going over it. But what was the other one I wanted to bring up? Oh, here we go. Most recently, the banking regulators published additional guidance, right? So they're talking about it, additional guidance to highlight the risk of crypto assets related activities. In January, the federal agencies released a statement highlighting crypto asset risks and recently issued a statement on liquidity risk resulting from crypto asset market vulnerabilities. You wonder why these crypto banks end up going under, right? They're talking about the liquidity risk of them right there. Federal Reserve staff continues to develop guidance on crypto asset activities, including on custody, trade facilitations, loan collateralizations by crypto assets, and the issuance and distribution of stable coins. I think these are the critical next steps to provide clarity around the regulatory expectations. So don't think that they're not coming, right? The digital currencies are on their way. The Federal Reserve is very much talking about it. This is the first speech coming out that really talks, including the bank failures. I mean, she talks about it at the very beginning of the speech. So this, I believe, was more timed around the situation that we are experiencing in the market than just a regularly, it was probably a regularly scheduled speech anyway, but to include some of the things that they are in it, I mean, it just leads me to believe that they were well aware of a situation such as this taking place. All right, let's move on here. Did I see somebody join the channel? Thank you very much, Randy, for joining the channel. I very much appreciate that. I have not done just a membership exclusive video recently, so I will do that for you guys here. I'll try and come up with a good video for you so that you have some kind of incentive to actually join the channel, which I do appreciate your support and all that. So thank you, Randy. I do appreciate that. Let's see here. Let's go up to the top. Hello from Canada. Right on. Hiya, fellas. Seattle here. Dallas here. Houston here. Right on, guys. Thank you for joining in. Bought 2x4s for $3.34 today at Lowe's. Yeah, we have ours about $3.69, I think. North Carolina here, excited for the stream. Lay it on us, lay it on us straight. You got it, guys. Evening L, bought some silver today. Hey, good for you. You know, that's one thing that I've noticed here. You know, when you typically have an economic panic, such as like a banking failure, at least a major one like we had seen, it's the flight into dollars that people have a tendency to go to. And something very interesting, when this banking collapse started to take place, when this failure started to happen, cryptocurrency like Bitcoin really started to take off. Like, people are recognizing now that the safe haven is not within the United States in the corporations or the banking system or the government, right? Where the safe haven is going to be is in gold and crypto like Bitcoin, and it's going to be in probably more of the items that you need of necessity. And those are the things, those are going to be like the top ones. I mean, for years now, what have I said? Like, get into cash, gold, silver, and crypto. That was like my three go-tos. I have not really deviated from that this entire time. And what do you see being the safe haven right now? Right? Gold, silver, and cash, and crypto. It's not like the place to be, but it's certainly not taking the, I mean, it's moving into the fear, right? Like, people are fearful, and those things start to increase. It leads me to believe that people are starting to recognize that this banking system is going to go through a major change, whether it collapses completely or, you know, is going through the great reset into a tokenized digital concept. I see that happening here, you know. All right, evening y'all. Bought some silver today. Yep. Okay. Bought a 10-ounce silver bar tonight too. Good for you. Up 2 Morgans today. Love stacking silver. Can this be an artificial scarcity? On the wood? No, man. Because you got to think about it. Like, the loggers aren't cutting because the mill doesn't need the wood, and they're not cutting because of the export. So you have to think, like, logging here in the United States isn't just for the United States. Logging here in the United States is also creating timber for an export, right? So there's a lot of demand for the timber outside of the United States, not just the United States in the mills that we buy and cut the lumber from, you know, cut the trees from. Did I get it? Yeah, thank you very much for the super chat. John for the $4.99, very cool of you. Thoughts on Signature Bank's shutdown, even though it was solvent? Regulators allude to the fact that it dealt with crypto companies' overreach. Yeah, and I haven't got I haven't dug deep enough into it to actually get the details of Signature Bank, so I wish I could give you a little bit more information on that. It's, you know, this whole thing like started to happen over the weekend, right? And so trying to recognize now how the regulators and the Fed and everybody else is dealing with it, I don't have all day to read. I got to go to work all day, and then I got, you know, so I'm trying to pick up as much information as I can. That's why a lot of times when this stuff, like these major events hit, like, you won't see, like, you know, me putting out a video like right away unless I have some like critical information, because I'm really trying to absorb exactly what is happening so that I can give you guys a clearer picture. I mean, to me, like, basically what I have seen happen, from whether it's the cryptos or you know, even all banks in general, is that you have assets on your balance sheet, assets and liabilities, right? And somebody else was kind of questioning this, and I mean, to me, it seems pretty simple, right? You got assets, you got liabilities, a balance sheet, right? If you have more assets than liabilities, well, then you're profitable, right? But generally, if you are putting out a loan and you sell, like, you get somebody to sign a loan, right? And you give them the money and you're like, here's your money, give me that piece of paper that you signed. That piece of paper, that's the asset, right? That's what the bank's asset is. The liabilities is all the cash that they put out there. Now, on the other end of it, as if, you know, if we're taking out the loan, we're borrowing the money, our liability is the loan. The asset is the cash that they gave us. So it's exactly the opposite for the bank, right? The cash that they put out there is the liability. So now these banks, when you have assets and liabilities, you have a balance sheet, right? As the asset pays off, and then, you know, balances out the liabilities. Once the asset's paid off, you're still back to balanced again, right? So you get your liabilities back, you know, your asset becomes, you know, you get the profit off of the asset from the payments of it. Now, here's the thing. This is really where it kind of gets critical, right? Is because if you can get more of your liabilities back, right, you can get the depositors to put money with you, then you're getting more of your liabilities. That makes your assets more profitable, right? Assets, liabilities, get more of your liabilities back. Your assets are above your liabilities. They become more profitable, right? But let's say the assets start to fall in value, Well, now your liabilities are more than your assets. Your credit rating goes down, your ability to get loans and all the other stuff that goes with it starts to deteriorate. So when you have a bunch of US treasuries or cryptocurrencies or, something of that nature that's sitting on your balance sheet as an asset, and then the interest rates begin to rise, and that starts driving the price of the US treasuries down, which is part of your assets because you might be holding bonds or US treasuries as part of the assets of your balance sheet, and it starts driving the price of that down. Well, now your assets are becoming less and less and less, and your liabilities are becoming more. So this is one of the reasons why you saw so many like banks offering better interest rates and stuff like that. They're trying to get those liabilities back to, to balance out their balance sheet. And this is really where I think a lot of these banks are starting to fail, is because the interest rates went up and they just can no longer have the assets to cover their liabilities out there, and then they started going into solvency problems. So whether or not the Fed recognized that in the next coming days that some of these other banks are going to have issues and they're dealing with them preliminary, I don't know. That seems to me to be the case, but I don't want to just come out there and say that because I don't know for sure. All right. Let's see here. Let me go back up a little ways there, get some more questions. All right. XRP certainly has the connections to banks and IMF. Yeah, and now here's the thing about XRP. Now, I don't deny the fact that it can do everything that the XRP fans are saying it can, or anything else. Like, I'm not trying to deny that at all. The only problem that I'm having, and I'm still not finding it because people sent me a ton of links after I made this comment, and I still have yet to find it, is the Federal Reserve, like in one of these speeches or something, saying it. Ripple, XRP will be used, or this is the idea that we're going to be using into the future. There is nowhere, anywhere, where I can find the Federal Reserve saying that. Now, there is parts in the Federal Reserve, like if you go to federalreserve.com, right, there are places within the text of that website that you can find XRP and Ripple, but they are more of like, they're like suggestions. There were like letters of suggestions going to the Fed that the Fed had put on their website. There are a couple of like little comments that kind of allude to the idea of XRP being it, but not specifically like out there stated, right? Most of the stuff that's on the Federal Reserve's website that has XRP or Ripple stated has come from somebody else that was sending information to the Fed. But nowhere do I find where the Fed is outright saying that we are going to use Ripple or XRP. Nowhere can I find that. But again, I'm not saying that they're not going to. I can't send you a link that says, hey, this is it right here, So until then, I can't say that it is, And I mean, plenty of people are trying to say that it's going to be XRP, but I don't know. All right, I'm going to start accumulating crypto mining ETFs. Thoughts? I don't know. You don't own it, you don't hold. I mean, if you don't hold it, you don't own it. So I would be very leery of any kind of third-party risk right now. Any kind of third-party risk. I would just be very leery of that. So Credit Suisse, and that's me personally. I mean, what do I know? I'm driving a 99 Toyota Corolla, right? I haven't got my Camaro yet. The bank is mostly residential mortgages, most at lower rates. Crypto owners are dreamers. All right, we need you now more than ever, UE. Well, I thank you guys. I do my best here, right? I mean, I try to get the information for you. I try to get the links down in the description. I try to interpret the stuff the best I can. Try to give you guys my predictions, from the information that I get. It's kind of funny to think that I was talking about cryptocurrencies and central bank digital currencies like 4 or 5 years ago, back before anybody was talking about it. And it wasn't because I had the suspicion that the central banks were going to start issuing a digital currency. It's because I found from the IMF an article talking about how they need to get cash out of the system and go negative, that they would have to have a central bank digital currency. Of course, they weren't calling it central bank digital currency. They were calling it a e-currency. But they straight up said that they were going to be doing this. I mean, it's not a surprise to me. Like, a lot of people get surprised by this, and I don't know why. It's just like they here's the thing about like these speeches and everything else. The Federal Reserve In fact, this is something else. Inside of this speech I thought was kind of interesting. I was going to bring it up after I kind of went over it a little bit. There is a spot in here where they say transparency probably 50 times in like a single page. It's just like over and over again, they keep mentioning transparency, transparency, transparency. And it makes me wonder, it was just like, what in the world is it that they're trying to get at here with this whole transparency thing? So when you hear them saying something over and over again, or they bring it up, or they're talking about it, they're giving us warning. They're telling us ahead of time. They're like, hey, we're going to do this. And then they may never ever talk about it again. Kind of like the average inflation rate. Remember that? I mean, they brought it up. They said, hey, we're going to switch from going in a 2% inflation target to an average 2% over time. They made this statement, everybody talked about it, and then they shut up about it, and they never mentioned it again. And now everybody still thinks that it's 2% target, and they're not correcting them. Like, the Federal Reserve isn't coming out saying and reminding people that they're going for a 2% average over time. They don't tell people that. They just like, hey, we told you once. If you don't remember, then that's your problem. That's really, I think, a lot of their attitude towards things. All right, UE, I ordered my chickens for the year. Good for you, Jaws. It's good to see you here too, brother. I have a buddy of mine who has like a whole bunch of laying hens. He has like 30 or 40 of them or something. So I'm gonna get a handful of laying hens from him, like 3 or 4 of them. And then I'm gonna raise some chicks as well. So we'll get those going. How about a worthless digital yuan? I don't know. I mean, again, like, what is worthless? I mean, it's all worthless. It's all fiat, right? It's all, money by decree anyway. It doesn't back by anything except for somebody else's promise to pay. So, I mean, if you're talking worthless central bank digital currencies or worthless dollars or worthless I mean, it's all worthless, right? U.S. treasuries are worthless if they're all backed by dollars, which are worthless. So, I mean, if you keep talking worthless, then there's no point of even watching the economy anymore because it's all worthless, right? I mean, you still got to figure out what it is you got to do with your life, and you dealing with worthless fiat currency will get you some worthy stuff. So, I mean, it can't be too worthless. You can leave 90% in the bank as long as you bought 10% of solid gold. Yeah. I mean, if this is the other thing, like, this should really be a wake-up call for anybody who has everything within a third-party risk. Like, if you don't think that I mean, I said it in a video the other day. People asked me, it was just like, are you worried about not being able to get your money out of the bank? No, I'm not worried about that. But then again, I'm also not worried about having something I have something that's away from a third-party risk. So my risk, my risk tolerance is much different from most people's, because most people have their stuff sitting in a third party. They have an envelope that comes in the mail or something like that tells them how much they have. That's not the case for a lot of people out there. And so when you have like things outside of the third party risk, that third party risk thing, like a bank failure or something like that, is not nearly as scary as it is for people who have everything they have tied into it. All right, did I get another super chat? I did. Hey, Jaws, thank you very much for the $9.99, man. Does composite decking price ever fluctuate? Yeah. Still going, let's see, number still going strong at 14 months now. Sobriety and healthy diet is working. Also sticking it out per our last email. Thank you. Thanks, UE. Jaws, thank you, man. I appreciate it, man. That was pretty solid. Let's talk about the composite decking. There is a lot of, this is one of my favorite things to sell. I am really good at selling composite decking. Here's the thing about composite decking. There is a huge variety of this composite decking. If you're not familiar with composite decking, or if you're not familiar with my channel, I work at a lumber yard. I do retail sales for a living. Now, composite decking is just basically like a deck board that is made out of a composite material. Generally, it's a mixture of plastic, wood, and fibers, and PVC and stuff like that. So anyway, it's a much more stable, easier maintenance, rot-free, stuff like that. It's just a better product to build these decks from. Now, here's the interesting thing about composite decking is that there is a huge price difference between the low end and the high end. And I mean, you're talking on the low end, you can get it anywhere from just under $2 a lineal foot all the way up to the high end of like $8 a lineal foot. So if you got 1,000 lineal, like a 500 square foot deck, right? You're buying 1,000 lineal feet of this stuff. The difference between a $2,000 or $3,000 deck and an $8,000 deck, I mean, it's quite extreme. So there is a huge variety of composite decking that's available out there. Now, what I found out there is that most of this stuff, if you're looking for the maintenance and the durability of it, I mean, as far as like longevity, how long it's going to last, they're all pretty much the same. Like they're all going to have pretty much the same qualities in that fashion. However, where the money starts getting spent is in the appearance of it. So like you'll have some decking that is very plain. There's only like a couple of colors. There's no color variation to it. The wood grain texture of it looks very generic. It is a very simple, plain, not much to a product, right? And then you have some that are like really good looking. There's a lot of color variation to it. The wood grain variation to it looks really good. It has a much more natural appearance from the street. You might even think that it is real wood. So this is like the price difference between the one that really looks cheap and the one that really looks good, the one that looks natural. That's where a lot of the money is spent on it. But then there's something that I like to call the scratch test, right? So you take a nail, like a 16 penny nail or a screw or something like that, and you imagine that you got like the patio furniture, you got the barbecue, you got the dogs, running all over. They got the kid with their skateboards or whatever playing on this deck, and you're wondering how much will this thing end up scratching. You take like a 16 penny nail against some of the cheaper decking, you'll be able to scratch the heck out of it. And you go up to the higher end decking and it'll hardly make a mark at all. So you can save a lot of money on your composite decking by going to the cheaper versions of it. But then again, if you're going to be entertaining or being on that, on that deck a lot, then you might end up damaging the surface a lot easier than if you went up to a higher end deck. And then you would have something that has a better look to it for a longer time. Anyway, that's my decking sale pitch. I hope you enjoyed it. All right, Lumberjack, man. Thank you very much, Matthew, for the $10. Diversification is always key. FDIC is great, but folks should also be looking to see if their bank has DIF. It's insurance above and beyond FDIC. Also, some money in credit unions, access to cash and silver. Yeah. See, now that's what I have my money with, is with the credit union as well. I didn't know to get with a credit union. It was just happened to be the bank that was closer to the job that I worked at the time, and I needed a bank, so I took my check over to that bank and started up. So it happens to be one, a federal credit union that I use here, locally, and I have always been very happy with them. I've never had any issues, But then again, I never really had anything to have an issue with. So. All right. By womanized or cedar? I guess it really, like, okay, so what that question is referring to is pressure treated decking. Like, so you got pressure treated boards. Typically you would see like little holes marked in them. They perforate it so the chemical goes deeper. They do the same thing with deck boards, except they don't poke the little holes in them, so that the chemical does go into the wood, but it doesn't go as far. So it's not rated for ground contact, but it is rated for above ground use. And generally it's going to be a lot cheaper than pretty much any other decking out there. And compared to cedar right now, it's going to be a lot less. And I don't know, in my opinion, if you're going to go with a wood deck, then I probably myself would end up going with the outdoor wood or with the treated boards, and then deal with the maintenance of it every year, every other year, or something like that. Cedar decking would probably last a bit longer than the treated stuff if you were to keep up on the maintenance and stuff. But really, like, the cedar nowadays is not the cedar it once was. Like, there was a time when you could get some really tight grain cedar that was very rot resistant, would hold up really well to the weather, and especially up here in the Pacific Northwest where we have some extreme weather. But a lot of the cedar that they cut now is much younger, and it doesn't, I mean, it's still better than just about any other product out there as far as the rot resistance, but it doesn't hold up nearly like it did back in the day when we were, when we had those old growth type trees and stuff. So All right, you guys like my sales pitch? All right, Chase Jack, good to know. Let's see here. I am using as a sill, and I won't see too much sun. Looking at rot proof. Yeah. The two Walmarts that are closing are in Portland metro area. Yeah, that's what I hear. So, had a thought. Okay, well, let's hear it. Hey, you, D, I guess that's UE. Fun times, FDIC doesn't matter anymore. No, it really doesn't. Not when you have the government coming up and saying, hey, look at this. We'll just go ahead and just bail out everybody, whether you have $250,000 or whatever you got. We'll just go ahead and everybody gets covered. No risk. Don't worry. You know, you don't have to worry about what you do with your money. Just keep putting in the banking system. You'll be fine. All right. All right. Hey UE, read this. Another thing that has not so pronounced from the Fed is the job target, job vacancies. It's calculated that it's 1.7 jobs for every unemployed person. It's in the Fed's speeches. Is it? Yeah, it is. I mean, I've heard him talk quite a bit about the unemployment. Now, this is the thing about like the unemployment. I'm really like, okay, so unemployment basically means that people are on unemployment insurance, right? They're collecting unemployment. It doesn't necessarily talk about the amount of people who are capable of working, wanting a job, and don't have one, right? Because in my opinion, if you want a job, you should be able to have one. It may not be the job you want, like, you know, your ideal job, but there's like, I have a hard time believing that you couldn't get a job right now. So, you know, what I think about like what it is that the Federal Reserve is attempting to do, right? They have a dual mandate, low and stable prices of around 2% inflation target over time, whatever the hell that means, and full employment. So like we're at full employment, right? And now the whole idea is that we have to get the low and stable prices of around 2% average inflation, whatever that means. So their whole mandate has been covered on 50% of it, right? The unemployment part of things, right? Low and or full employment, I guess, is what the terminology is. So now it's all about low and stable prices. So as far as I can tell, in the information that I'm seeing, I'm guessing that the Federal Reserve will not pivot. I don't care what happens in the banking industries, what happens with interest rates, what happened with defaults, all the other stuff. Nothing. The Fed will not pivot until we start seeing unemployment rise, and they are no longer achieving their dual mandate of full employment. Right. So that's where I see the Federal Reserve pivoting. Right. Now, as far as like the inflation, I really, inflation is so made up, right? As far as the numbers go, they compare inflation to the way they compared it back in the 80s or calculated it back in the 80s or 90s or whatever. And then they say, hey, this is what inflation is today. And then you go and try and figure out what it is that they try and really put together to get this information, this inflation idea and what the actual inflation is. And the more I look at it, the more I realize it's all arbitrary. It doesn't really matter what the number is, it's the direction in which it's going. I think that's probably more critical than any other piece of information out there. I mean, yeah, you can show how high or how far or whatever as far as like the actual number goes, but it's really the direction in which it's going that is more important. Because, I mean, after you've read like the FASB 56 and you realize that all the numbers that we see, every single one of them is subject to the government or whatever agencies out there to allow us to see. Like it's completely like made up. They told us a while ago that they cannot give us the real information, the real numbers for national security reasons. But everything that we see out here in the news, all the numbers, all the inflation data, the US Treasury, all the stuff that we see out there is good enough for our investment purposes. That's what they told us, right? But they're not the real numbers. So everything we're seeing right now is all imaginary anyway, if you can believe that. So I don't really care what the number is. I just want to know what direction it's headed, because I think that's probably more accurate than the actual numbers themselves. Yeah. I mean, well, that's what I'm guessing, because after somebody says, you know, hey, we may or may not be lying to you, everything after that is a lie. It doesn't matter if they're telling the truth. You have to consider it a lie. you know, and before you be able to really take in that information. So once they have basically told you that this could be fake, it's like that's it. I mean, it's just like, well, that pretty much blows everything out of the water now, you know. When is silver going to the moon? I'm ready to cash in. It's not. It's not going to go to the moon. Okay. If it went to the moon, the whole banking system would crash. So it's not going to. Thank your lucky stars right now that you can buy it as cheap as you can and load up on it. Because, I mean, just think about it. Can you name anything out there that's less than 50% of its all-time high? I mean, besides maybe oil, right? Like oil's fit under 50% of its all-time high. But there's very few things that are out there that are under their 50% or that are under 50% of their all-time high that was set back in early 80s. Like, how is it that silver can be this cheap? That's what blows me away. Well, I know it's because they have 100 paper ounces or even more paper ounces of silver for every 1 ounce of physical that's out there. It certainly puts a flood of silver for people to buy. So as long as you have these paper derivatives in the market, I don't see where silver is ever going to skyrocket. There's two scenarios that I would see silver skyrocketing in. One is if the rest of the world decided that they were going to start buying into it because there's simply just not enough. I mean, think about it. There's, what, 900 million ounces produced every year or something like that. I can't remember what the exact number, but it's quite a bit. It's like 900 million ounces. 50% of that goes to industrial purposes, right? So there's really only half of that available. So let's say there's, 450,000 or 450 million ounces of new silver produced that could be purchased. Well, that really leaves like what, 2 ounces per America. If every single person in America decided they were going to buy just 2 ounces of silver, it would completely wipe out the entire world production of silver. I mean, we're not talking Canada, Mexico, China, India, Russia, all these other people buying silver as well. Just the United States decided they were going to buy 2 ounces of silver per person, it would completely wipe out the entire global production. So it's incredibly rare. It's very precious that people just don't seem to put a high enough standard on, as far as like whether or not it's a decent savings or something that should be accumulating. Like, I hardly know anybody who is actively buying silver. Very few. All right. Let's see. I learned a lot from you, E. Well, thanks, guys. I try to come out here with as much information as I can so we can try and figure it out, One of the things that I really like is how many people have told me, it was just like, man, you really explain this well. You make it seem like you give it a lot more sense. And I know the reason is that, most people are not going to be able, or not necessarily be able to, but just are not going to take the time to try and figure out what the hell all this lingo means, right? I mean, that's really where a lot of it is. I mean, when you go through one of these speeches, it's not like we don't understand the definitions of the words, right? I mean, we understand the words. It's how they're using them and what sense that they are trying to put out there for the people who are into know to know, right? So the idea behind the way they do this is that the average person will never figure it out. Like, if you just like were somebody who weren't really that interested in macroeconomics or something and you picked up one of these speeches, it would be so confusing. It would just like, you'd be like, oh man, I don't get any of this stuff. But then once you kind of break it down a little bit and you kind of understand what it is that they are saying as far as the language that they use, the meanings behind it, the even sometimes just the simplicity of how they actually say stuff. Like where is it? Right here. Like this speech that was given by, what was it, Lael Brainerd? I mean, this one sentence in this has just got me tripped out, because this entire speech, I mean, it's just like, there's a lot of good information in it, but it's just that one sentence. This is why it has been important for monetary policy to take the risk management posture to defend the expectations anchor. Right? Now, this is really important because you got to think, this speech came out a couple of months ago. They weren't talking about fighting the inflation expectation. They weren't talking about, like, reducing it or anything. They're talking about defending the inflation expectation. That means they like it. They want to keep it. They're defending it. They say, hey, the inflation expectation is where we want it. We're defending this. This is what we want. Right? And yet, if you read that speech, you would think quite opposite of it, just by the way they by the narrative that's out there and the words that they use, right? But that one sentence inside of there is just like, nope, that is telling to me. That is a very telling sentence. Much like the John Williams speech, where they said that the major problem that the Federal Reserve had was a inflation expectation that was persistently too low rather than too high. Well, now it's persistently high. Not a problem anymore. Right? And this is where, like, I think a lot of people feel that the Federal Reserve has made a mistake. I don't think they had. I mean, I don't think they have by their own words and what they're saying. It's just like they are very much pleased with the situation. They are going to transfer this into whatever, like, digital concept that they are going to do, take cash out of the system and run people into negative interest rates, and they get to continue playing their game, right? Otherwise, it comes to an end, and then we'll have to figure out something else to do. And I don't think they're ready to let go of that power. I mean, I don't even think they're going, like, remotely close to trying to, like, let that go. They are figuring out the game plan to keep us enslaved in debt. Very little doubt in my mind about that. All right, a rise of unemployment rate through job vacancy targeting. Yeah. I mean, you think about it. This was like, one of the things, like, I mean, some interesting things that were just said by the Federal Reserve. And I mean, you think about, like, some of the issues that have come up since then. Like, I remember, okay, so the Federal Reserve, let's see here, who was it? Bostic, I think, who said it. And it was probably about 5 years ago. They were talking about the inequality, the pay inequality between, it just everywhere, right? Between the races, between the sexes, between everything. There's pay inequality, right? And how the lower wage earners really needed a boost, right? Because of this inequality. And, I thought to myself, I was like, how is it that you could bring up race and then talk about how it is that you can try and figure out a way to get the wage increases to a particular target, a particular target like that? And so I thought to myself, this is absolute BS. Like, there's no way that the monetary system can target a particular direction like that. That is not the way this works. And then here during the pandemic, there is all this massive job openings, right? And really good high-paying jobs, I don't know about good, but high-paying jobs are being offered out there. And I'm thinking to myself, holy moly, like, the Fed was talking about trying to figure out a way to get the lower wage earners to get more wage increases. And then here it is. I mean, again, like, one of those things, it was just like, was this, just coincidental? I don't think so. Like, the Federal Reserve said that they needed this to happen, yet here it is, right? And so now I think about that. It was just like, how do you plan to do something like that? But it was the same plan that they used to bail out all the corporations. It also took care of the employment too. Because if you think about it, like, during the pandemic, we had these special purpose vehicles that were established to bail out the corporations. Now, whether or not the Federal Reserve was going to outright do it, or if just by putting out the credible threat that got people out there front running the Federal Reserve by buying into the corporate debt, either way, the results were the same, right? So the Federal Reserve set up that special purpose vehicle, funded it with hundreds of billions of dollars, put out the narrative that they were going to be buying corporate debt, had the people screaming around the world saying that the Federal Reserve was going to be picking the winners and losers, and then everybody started to front run the Fed by buying into this corporate debt, right? Buying into all kinds of debt. It was like this, like, I mean, these corporations were gorging on this cheap stuff. So as the Federal Reserve was going into their quantitative easing, driving the Treasury yields down, the risk to try and get yield was increasing. So people were going out there on the risk ladder trying to find that yield, and they were finding it in corporate debt. So they were buying up a bunch of this corporate debt. Well, now you're a corporation, right? And you had this ability to gorge on this incredibly cheap debt, right? So here you are, you're taking all this money. You're like, oh man, what do we do with this stuff? Well, you got to start spending that money, right? So you can start, increasing buildings and equipment, start hiring people, right? So they started hiring a whole lot of people. This is where the great job migration came from. Everybody was leaving their crappy jobs and moving into these higher paying jobs that really shouldn't have existed in the first place, since it was the zombie corporations who were gorging on this cheap debt. Now, whether they were a zombie or not, I mean, it was all corporations gorging on it, but zombies were them too, right? So they're gorging on this debt and they're hiring these people. Well, as they're hiring these people, the wages started to increase because now people can't find anybody to work these lower wages jobs. So if the lower wages start to increase, then the higher wages have to increase as well. So this is really where I saw the ability to not only bail out the corporations, but also to take care of the wage inequality, which really didn't work. I mean, it increases the lower wage earners, it increased theirs, but then the upper wage earners just blew it away. I mean, they just got way more than anybody else. I mean, they definitely got the lion's share of it and just pretty much escaped even further away from the rest of us as the inequality grew even more during that time. So this is where I feel like a lot of the employment, people were wondering, where did all the workers go? How come nobody wants to work anymore? It's because they all went to these damn zombie corporations and stuff like that. Now you're starting to see the mass layoffs start to take place as a lot of these tech companies and everybody else is starting to lay everybody off because they never should have existed in the first place, right? That's the problem with it is, I mean, somebody else asked me about it too. It was just well, this doesn't make any sense why these corporations would do all this. And I'm like, they didn't do it. They aren't the ones doing it. They are trying to do their job, as far as grow a business. I wish I could find where I got this information, but it was a great description of how these corporations end up rising the way they do. And really what it comes down to is say you got a bunch of investors, venture capitalists who are going to be putting a bunch of money towards a particular technology industry or something like that, right? So they got these 5 corporations who are going towards this particular innovation that these investors are encouraged about, right? So they're going to invest into this particular innovation. But there's these 5 corporations that are going to be doing it, and they don't know which one of them is going to be the successful one, right? So you invest in all 5 of them, right? Knowing that 2 of them are going to fail, one of them is just going to be okay, one of them is going to do all right, and the other one's going to absolutely kill it, right? So after the investors have put all their money towards these 5 corporations, 2 of them fail, they're out of here. The remaining 3 yield the investor a certain percentage. That's what they're looking for. These other 2 corporations were never going to make it to begin with. Never. They were zombie corporations. They got a bunch of funding. They tried to do it. They couldn't do it. Everybody gets fired and laid off and stuff like that. The other 3 real viable companies, one of them will do well. The other one's going to, okay, and the other one's just barely going to break even. So this is kind of the idea. I mean, obviously I shortened it up, but this is how these corporations end up rising and then falling like that. It's not it's not somebody's bad decision. It's just that there's only enough room for a certain amount of them, right? And the other ones are just going to have to fail if they can do it. All right. Money for nothing, jobs are few. When oil was $30, prices never fell, but when it went up to $100, prices sure did rise. Yeah, well, now here it is, 70, down into the $60 a barrel. Let's see how long it takes for it to get back down to $2. It probably won't, right? And now I think again about this is a lot. See, I'm almost experiencing something very similar in plywood right now, as plywood prices are starting to rise. Right? At the same time, lumber future prices are falling. These are 2 different products here. Right? They're very similar in the sense that you think, well, one's lumber and the other one's wood, and it's kind of just glued together into a sheet. What can be the difference between them? There's a major difference, right? Lumber is produced in a different quantity, quality, all the other stuff than it is plywood. Plywood's made at a different facility. It takes time. Other products go into it, like glues and resins and stuff like that. There's a lot of different manufacturing issues that come up with plywood and demand issues that are different from plywood. Plywood is also used a lot in furniture and cabinets and all kinds of other places that is not necessarily in the new construction market. So plywood prices, even though you see lumber prices falling, have actually been moving up and at the same time. And I'm actually starting to find where lumber prices, even though the futures are coming down, are starting to move up, but very small, just a little tiny pieces. So to me, that's more of inventory balances that are taking place there as opposed to following the market itself. But plywood, yeah, I wouldn't be surprised to see plywood actually start to go up in price at the same time you see lumber going down. All right. Did you see the PBS doc? I guess I didn't. George Gammon says the yield curve shows recession is imminent. Okay, I would totally agree if you completely follow the yield curve as an indicator, which to me is a very, very good indicator. I mean, that 2-year, 10-year has predicted how many recessions of the past recessions. I mean, it's a really good indicator. The only pushback I have to that right now is that with the quantitative easings that have taken place and the changes to the way the Federal Reserve buys and sells treasuries, it 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 leads me to believe that the yield curve control that they used to announce and do has kind of gone into almost a not necessarily secretive mode, but less pronounced out there. And so when you think about like where it is that the investors used to indicate, or how the investors would indicate the US treasuries being the recession indicator, is that the short-term treasuries, the yields on them would start to rise where the longer term would start to fall, right? So what they're saying is that right now I am very nervous about tying up my money, and if you want my money, you're going to have to pay me a higher yield for it. So that's why you see the short term start to rise. You know, out 10 years, I'm not so scared anymore, and then after that, I'm starting to worry again. But as far as the short term, very nervous. 10 years, not so nervous. I'm worried about the short term. That's the recession that I'm worried about, right? And that's usually the indicator and why you would see that inverted yield curve start to take place. But again, like the way things have happened over the last couple of years and the massive amounts of US treasuries that have landed on the Fed's balance sheet and them unwinding that balance sheet, like allowing treasuries to roll off, or even the outright selling of treasuries if they go into that kind of thing, would start to obscure that US treasury market. So it's not like the market itself, like the free market indicating the recession. It's the Federal Reserve screwing around with selling off their treasuries or getting rid of them that could obscure the market, that now says, is this the actual market indicating the recession? Like, I mean, to me it is. I mean, it's going out there, but I have to question it now, because it's not like, you know, before the Federal Reserve with all their massive quantitative easing had taken place, that US Treasury inverted yield curve was a very good indicator. I mean, it definitely said, hey, this is what the market is feeling. Nowadays, I don't know. Like, I have to question it a little bit more. I mean, but I still feel that it is showing that there is a recession. So I agree with that, you know, but again, I have to start to question it. All right. Bailouts for now, bail-ins on the way. I don't think so. I don't think they're going to bail in. I really don't. You know, I think that's what banks will do if they have no other choice. But I think the Fed has other options, and I believe that they have other tools that they will be introducing that won't need a bail-in. Like, I mean, I could be wrong on that, but at least from the feelings that I'm getting and from what I'm reading on it, it seems to me that they are guiding this right into cashless central bank digital currency kind of thing. And it's going to be very slow, and it's not going to involve panic. Right? That's probably the number one thing, is that they don't want panic. And that's one of the reasons why they stepped up and just said, hey, we're going to, you know, insure all these deposits no matter what, because they don't want the rest of the world out there or the rest of the country going, oh crap, and pulling their money out. You know how many people I asked? I was just like, hey, did you pull your money out of the bank last night or whatever? And it was quite a few people who said that they pulled a lot of money out. And I'm like, what are you going to do with it? Put it back? You know? All right. My wife and I drove through Astoria last week, and I was looking for the blue dice in every Toyota. Didn't see it. Oh, well, that's a bummer, man. You should have said something. We could have hung out, or, you know, went and had a cup of coffee or something. The unemployment number should be looked at as some minimum number. Yeah, and again, like, you know, what is unemployment? And that's the amount of people who are on unemployment insurance. Does it really say how many people are out there looking for work? You know, and then I also have to think, like, how many people out there, like the gig economy, like the way things are done now, there are so many opportunities to make money that's not from a 9-to-5 job, that it leads me to wonder, it's just like, how many people actually really need to go to find like a 9 to 5 job? Like, is that a necessity anymore? I mean, the more I find out there, the more I see like people who are attempting to do online businesses, or the desire to have like a 9 to 5 job is just it's not there. Like, they would rather have like their own business, working like a better career kind of job, but just the average old just honest job 9 to 5er is just like, I don't see how anybody really even has that kind of mindset anymore. It's drifting away, I guess I should say. Inflation has stayed the same last 2 months, and this month it went up slightly. Yep. Hey, UE, unemployment in which industries, job types, which is most likely in your viewpoint? Unemployment in which industries? Retail. I think retail stuff is gonna start fading away. Anything that provides convenience. Conveniences are going to be what it's all about, because you have to understand that this nation is coming to the point in which that the standard of living is like such an elevated position. Let me see. Think about like the homeless population and what it is that they have. Like, and I mean, I understand, like, I mean, there's this poor girl over here trying to get her tent put up, but they don't have much. I understand that. But then you think like homeless or poverty in some nations where they really have nothing, like nothing at all, right? The homeless in our nation is actually doing quite well comparatively. So this is the result of the higher standard of living that we have here in the United States. And what it comes down to is wealth. Wealth is food, conveniences, and pleasures of life, right? Well, the United States produces a lot of food, and although there is hunger here, I mean, I'm not saying that people don't go hungry. There's plenty of people who go hungry. But for the most part, there's a lot of food in this nation, and we don't really stress about food, right? Not like some nations do. Conveniences. I mean, everybody is about conveniences. In fact, world is so addicted to conveniences that they do not want to inconvenience their life to have the things that normally people would have wanted with their life, like a family. That's too inconvenient. They don't want it anymore. They only want conveniences. And now the pleasures of life. Well, you think about like how many people are addicted to their phone. Like, they need constant pleasure, constant stimulus, constant dopamine hits all the time, right? And so this is the condition of life that we have here in the United States. Food, conveniences, and pleasures of life. That is wealth. We are an incredibly wealthy nation, and that's only going to get worse, right? I mean, or better, depending on how you want to look at it. So you can imagine that the food is not going to get harder to get. It's only going to be easier for us, right? Now, with that being said, there is going to be some food shortages coming up where it's going to get quite expensive. And what I mean by that is it's going to be more of a problem for the people around the world who really go into starvation, driving up the food prices. Here in the United States, we're going to have food. The only problem with it is that it's going to be expensive. That's the difference that the food shortages are going to be, right? The United States will have it. It's just going to be expensive, and the rest of the world is going to suffer in starvation, right? Famines and stuff like that. The conveniences are obviously presenting themselves. It's happening right now, right? And the pleasures of life. That's it. Food, conveniences, pleasures of life. This is going to be like the condition in which that people are in. And if they can do that without having to work, then they're not going to do it, right? I mean, most people, especially when it came to young men, tried really, really hard because what they wanted to do was try and start a family. That is what drove them, right? I mean, otherwise, why work so hard if you didn't want to put a family together? I mean, you can provide everything you need for yourself. You don't have to work that hard in order to provide the necessities for yourself. But if you want to have a family, you have to work way, way hard. And you have to be committed and dedicated and disciplined and all the other stuff. And nowadays, if you want to have a family, it's incredibly expensive. And since most of the time it will lower your standard of living as opposed to raising your standard of living to have kids, a lot of people just won't do it. So this is really the condition in which we're in. And we're going to have a shrinking population, and we're going to have ever increasing amounts of inequality, between the rich and the poor. And we're going to find where the conveniences are going to drive people into the ability, or I don't know about the ability, but I guess the ability to go through life without having like gainful employment or something. Anyway, that's just me kind of babbling off. Let's move on here. Okay, geez, there's so many comments here. Gosh, okay, subjective, the inflation feels less in my part of the country, and the food at Publix is even getting a little cheaper. Yeah, and I'm finding that as well, that, like there's a lot of things that, like my wife does most of the shopping, but she'll come back and she goes, look at all the stuff that I bought for cheap. And she has always been a really good shopper anyway, so it doesn't surprise me when I see it. But, anyway. Thank you all for hitting that like button too. We got 433 of you up in here, 200 likes. Hit that like button. We'll get some more people up in here. The algorithm will pick it up if we have more people hitting that like button. All right, the Corolla doesn't need a ship. It has wheels. All right. Let's see here. Just recall we bail out SVB while we have thousands of people living in tents. Yeah. And I mean, I don't know what it is that you intend on doing about that. I mean, there's never going to be a time ever in the history of the past or the future where there won't be homeless people. Like, that's not a concept. I don't know where. I mean, I can understand there might be a condition in which that you're going to try and help the homeless or try and, give them the ability. I mean, there's all the jobs in the world out there. They could have gone to work, right? I mean, like somebody said, you can. Anyway, and I understand like mental health issues. I understand like condition. Like once you have put yourself in that condition, it's very difficult to get off of it. I mean, the streets are like a magnet. It keeps you there. I understand all this stuff, right? I mean, I've talked many times to the homeless community. I've, tried to study up as much as I can on some of the issues as far as how to deal with it. It's an economic issue. You cannot change this, right? It's economic forces at play. If Cantillon can write about it back in the 1700s, then there's nothing you're going to do about it hundreds of years later. It's just a condition in which that is going to exist. Very much like elites, right? You're never not going to have a time when you don't have the super rich. It's just the way it is, right? You have the super rich and you have people in poverty, and there's always going to be there. Now, there is times when there's, a gap in the middle, and sometimes that, that middle class can grow really strong. The problem with that is that it's the flow of money, right? It's a cycle within itself. Go from poor to doing well to rich to collapse. And that's the way the nation is going to end up going through. I mean, it's just part of the Cantillon effect of it. Now, if we can continue to bring new money into the system, like a nonstop continuation of bringing new money into the system, well, then things will continue on, right? I mean, but how do you do that? How do you convince the world to keep buying your debt? How do you, how do you keep the system going with new money coming in if eventually the people just say, hey man, I'm not going to lend you anymore. That's it. Right? Then it's over. Well, the world's still still lending us money, right? I mean, they're still looking at the dollar as the safe haven, still using it as the world reserve currency. I mean, are those things changing? Yeah, but they're not changing tomorrow. So, what do we do? All right. It ain't the tent people. Bottom line equals more work, same pay. What are your thoughts on the Ether Circus bill, or wait, that name of my band? Silly me, you should check us out. Thanks. Ether Circus bill, that's the name of your band? Ether Circus? All right. In 2 years, survival will be your number one priority. In 2 years, survival will be, huh? Laugh out loud. Yes. When Fallout 5 comes out, we will play it without a computer. Boomer greed has destroyed this country. What? No, it didn't. I mean, okay. That's your scapegoat. And if you want to use that strategy, then go ahead and conduct yourself in a way that says the boomers did this to me, because I'm blaming everything on all my problems on an external, right? It's the boomers' fault. It's the Fed's fault. It's the government's fault. It's their fault. not mine. I mean, I didn't make bad decisions. I made all the appropriate decisions that put me right where I'm at, and it's somebody else's fault. I mean, greedy boomers. Thoughts on Fed now? I mean, I think that's what's happening here. I mean, I think that's the Federal Reserve and the central bank digital currencies and this whole tokenizing of everything. I think the Fed now is trying to design that and implement that system, right? How it is that you deal with the tokenizing of all the commodities and services and everything that's going on out there. How do you incorporate other sovereign nations into this game? How do you, deal with the transactions of something as small as a cup of coffee all the way up to as big as, $100 million international transactions? All this stuff, there is so much to try and figure out and put together. I mean, I can't, I mean, it would boggle the mind to try and, understand it all. I mean, to me, like, I know it's happening. Like, I don't have to know the exact details of how tokenizing is going to work. I just have to know that it's going to happen and that, smart contracts are going to start taking over. It really, like, I look at a lot of this stuff and a lot of people look at it as a scary thing. Like, they're going to come down and, put all this force on you and stuff. But I look at it like through the smart contracts, which are good and bad. But I can see like the idea of smart contracts and digital, you know, digital assets, different things like that, making governments and judicial systems pretty much irrelevant. Like, they, like, it doesn't matter. They can go ahead and make all the laws and rules they want. It doesn't matter because we're doing things that doesn't involve them anymore. And I would just love that. I mean, if we could, like, that to me sounds very, like, very much, anarchy, and I love that idea. Like, if we could get government out of our lives forever, like just no government whatsoever, God, I would just love that. All right. Inspirational Nomad. You called it great work these past couple of years. Well, thank you very much. I mean, it isn't so much like I thought these things up, like, oh man, I think the Fed is going to be doing. No, it's just because they talk about it, right? And if they talk about it, then I talk about it. And if I talk about it, then people say, man, you really got this right. And I'm like, well, not really. I mean, I was just kind of repeating what somebody else had already said. But I believed it. Like, I believe these are the things that are going to be taking place. And, there's so much noise and so much confusion out there that, I mean, if I was just, like, that's another thing. I had to turn off a lot of the other, like, economists and YouTubers and stuff like that. Not because their information isn't good. I think their information is excellent. There's some really, I mean, there's some guys out there who really know their stuff. The thing is that the information that I was gathering and I was studying and I was putting together was starting to say a little something different than what other people were saying. And so I was just like, well, I'm going against a lot of this other narratives that are taking place out there. And I don't want to be like being somebody who just contradicts like what other people say, right? Because if I was like taking my information from other people and I would be like, well, this information was this guy, but I have to say something against that, right? Because this is what I believe. I wasn't going to do that. Like, I took the information that I had and I presented it as clearly as what I believed it to be. And whether it, aligned with somebody else or it didn't, I didn't care. That wasn't like, somebody says, well, this person thinks very differently. Hey, whatever, that's what the way they think. This is the way I think. And I'm not going to change anything about the way I'm thinking just because somebody else disagrees with it or they had something that contradicts my information, right? I'm not changing. This is truly what I believe. I, been trying to, come up with stuff that is accurate, factual, and different from what everybody else is saying out there. And I think I've done pretty good at a lot of that stuff. Especially when it came to like calling out the lumber market before anybody else was, especially when it came to, everybody pointing at lumber and saying, hey, this is inflation happening right here. This is money printer go burr, prices go up. What else do you need to know? Look at lumber. And I was like one of the few people out there screaming at the top of my lungs, this is not what you think it is, and that you're going to see lumber come back down to a normal price. And a lot of people want to say, well, you can't look at lumber for that, and I'm thinking, okay, well, if inflation is running so rampant through everything. What happened to lumber? How come lumber is one of the few things that went through deflation, right? This is what I have to ask. I'm more under the impression that this is a supply chain breakdown. It has more to do with the supply side than it has to do with the monetary side. Although everybody is convinced that it's the monetary side of things. See, this is the reason why the inflation transitory period has been so sticky or whatever it is because I said it months ago. It's because the Federal Reserve, when they had demand here and supply here, said that they were going to start raising the interest rates and get help from the supply side. And I said right then it wasn't going to work because the supply is going to follow down with the demand. Why would suppliers try to supply into a demand that is going to get hurt? Like at the Fed, and everybody is saying we are going to damage your customer, then why would I try to manufacture, produce, distribute, do anything? Like, why would I try to do anything into that environment? You simply wouldn't. So what's going to happen is supply and demand fall together until it eventually reaches the bottom. Now, whether or not the Fed thought that that would happen by now or not, I don't know, right? But it's still, that's what I feel is taking place. And that's why the inflation fight is failing. It's because they can't get the demand to in line with the supply if the supply keeps falling. Right? Just like lumber right now. I mean, you think about all the mill curtailments, loggers, that aren't cutting the everything, right? All right. Thank you very much, by the way, for the $2 super chat. That was very nice of you, inspirational nomad. All right. I haven't screwed over future generations with my votes. Are you sure? I mean, are you sure about that? I mean, you voted, so that's that, right? Whatever decisions that are being made right now is on you if you want to take claim for that. I haven't screwed anybody over with my vote, right? But if you voted, then you did, right? Because anything that happens after this is now your fault, right? I mean, you voted. See, people ask me all the time, it was just like, who do you vote for? I won't tell them. I won't say who I voted for, right? The reason why I won't say is because, one, it's none of your business, and two, I don't think it means anything, right? I don't vote for evil, right? And people say you got to vote for the lesser of two evil. You're still voting for evil, right? Even if it's the lesser of two evils. I don't agree with any of that stuff. I don't participate in things that I feel are obviously going against the things that are going to better your life, right? These people do not make good decisions for you. It's just I mean, I have no love for that game, none. All right, 400 plus watching UE, awesome to see. Yeah, thank you. We got 421 of you up in here. A few of you could go hit that like button. We'll get 270. We can take that up to 300. All right. Have you had to spend much money on your car over the time you've owned it? No, I haven't. Changed the oil. I put new tires on it. That's it. That's all I've done. I have spent no money on this. When the mirror broke and, because it was sideswiped, you remember that? It was a few years ago that happened. I was asked, hey, are you going to replace the mirror? And I'm like, I really only drive it maybe 5 minutes. At the time, I lived very close to work. And I'm like, I'm not going to mess with it. It's like I probably won't even have the car that long anyway. One of the viewers sent me a mirror, so I had something to do that afternoon. I had to put the mirror back on. But no, I don't put any money. Transportation should be the cheapest thing in the world, right? I mean, it's just getting from point A to point B. Why it costs as much as it does, or why people put a burden on themselves to travel is just like, I don't know why people would do that. Like, I understand, like, I want to drive a nice new Camaro. Like, I really want to drive one. In fact, somebody was talking to me about it today. They just bought one, right? And like, I didn't even want to go look at it. I'm like, no, man, it's too much of a dream. It would break my heart or whatever. So, I mean, like, I want the new car. But the idea of how much one costs and what I could do with that money instead, like enjoy doing things with my family or investing that money for the future, makes so much more sense than to spend hundreds, if not thousands of dollars to try and travel every month when you could practically do it for nothing. Like, I mean, or very minimal. Yeah, it doesn't make sense to me, And so, but when you drive an old car like this, you have to have two of them. So I have my S10 too as well, the 2001 that I bought for $1,200. So if this thing ever does, give me issues, I have another one, right? And I keep an eye out for another cheap one when the time comes. And I don't know, maybe someday I will buy that Camaro, but until then, I just can't see spending a bunch of money traveling. It just doesn't make sense to me at all. And it never has. Like, I have always driven kind of crappy cars. There was one time in my life that I actually bought a new vehicle, or newer vehicle. It was a 95 Ford Ranger. It had 50,000 miles on it. I drove that thing for well over 300,000 miles. I definitely got my money's worth out of it. And so that's my vehicles. Like, my history with cars has not cost me a lot of money at all. Like, I have kept my vehicle expenses throughout life very low. The Fed now runs on USDC. Don't get involved. I don't think you're going to have much choice. UBI on the way, hyperinflation next. Yeah, and really, UBI is probably going to end up being more of a, it's going to come out of more of a necessity to prevent the deflation from happening. Once you go into a negative interest rate, the return on capital investment is pretty much non-existent. So in fact, it's less than that. It's negative, so the return on, like putting money towards something where you're going to get back less than what you put towards it, you're just not going to do it. And so if you have a negative return on capital investment, then you're going to have very little economic activity happening because of that. However, if you just give money injections every month, then people will be spending that money at will without any problems to it. But the return on capital investment going negative will almost guarantee that you're going to have a UBI of some sort in order to make up for that. Yeah. So if you're not understanding what I mean by that, the return on capital investment, so low interest rates are actually low interest rates are actually a deflationary or a non-inflationary issue, because what ends up happening is that you have this low return on capital investment with low interest rates. So let's imagine that you had $1 million back in the early 80s. You get this $1 million, you lend it to the U.S. government for, whatever, 10 years, and you got your, 15% interest off of it, or whatever it was back in the early 80s. That's a lot of money. $1 million invested back then would, land you somewhere between $100,000 to $150,000 a year. That's a lot of money that you get to spend back into the economy. You can buy houses and cars and go on vacation and do all the stuff, right? Now, when you take that interest rate down to 2% or less, well, now you lend the government $1 million. Well, what is it today? It's somewhere around 4% or whatever it is, and 3, 4, whatever. So let's say it's 4%, right? You lend the government $1 million at 4%, you get $40,000 a year. Now that is a lot of money. I mean, it's a lot for, an average job or something like that. But considering that you would get $150,000 back in the early 80s, and what $40,000 does, for the living standard today isn't really that much for $1 million investment. So the return on capital investment drops dramatically, and then that turnover back into the economy slows way down. So low yields, even though when they lower the interest rates, it stimulates the economy. It gives it like a shot in the arm. Everybody go out there and borrow money because it's lower interest rates, buy houses, cars, go on vacation. But then it ends, right? And then in order to stimulate the economy again, you have to lower the interest rates again. And then boom, people go out there and borrow money. Well, once you hit the lower bound of zero, well, you can't drop interest rates anymore. So now what do? Well, now you have to go into this massive quantitative easing and stimulus checks, right? Because you can't get the people to go out there and borrow it, or enough of it. Then you have to stimulate the economy by, actually handing it out there to people. If you had a return on capital investment that was much higher, then you wouldn't have to stimulate the economy. You could just drop the interest rates, right? But this is not the condition that we're in now. So if we go into negative, then the return on capital investment goes negative. The only way to stimulate the economy is literally with money injection. So you'd have to hand people like stimmy checks or something, or UBI or whatever it is. All right, it's all about the Cantillon Effect. It really is. I mean, once you understand the Cantillon Effect, I mean, obviously there's a bunch of stuff that he's talking about in that essay that just don't make any sense. He's talking about horses and wagons and, stuff like that. I mean, it's like we got airplanes and cell phones now, so there's a huge difference in, like, the experiences that he was having back in the 1700s as opposed to what we're having today. But some of those economic forces of new money coming in and how that travels and what happens to society when it does, I don't think that's changed, not one little bit. I think that new money pouring into the system separates the rich from the poor, gives the rich even more leverage over the poor. The poor end up having to suffer the consequences of lower standard of living and, displacement and bad health and horrible lives and everything because of it. Now, if you're on the right side of the wedge, it might be really good for you, but you got to be on the right side of the wedge of that. So. All right. Okay, Lucky, coming soon, can only buy fuel with central bank digital currencies. I don't necessarily think that's going to be the case. I think you're going to be able to buy fuel with whatever you want. I think if you want anything coming from the government, better get on board with the central bank digital currencies. You want your paycheck, you want your welfare, you want anything. You want to buy U.S. treasuries, right? All that stuff. Like anything that involves the U.S. government is going to start involving the central bank digital currencies, especially if it's like a welfare type program. Then it's definitely going to be that way because you're not going to. The reason is that you won't deny it, right? Like that's like they don't want to say, hey, you're gonna need to start getting paid in century. You'd be like, no, I don't want to be paid in that. But it was like, hey, you want to eat? Here you go. And you'd be like, thank you. Especially if you're hungry. So to me, that's gonna be the easiest way to get it in. Not force. Like if they force people to do it, then they will meet mass resistance and it will fail. They can't force the people to do it, right? They got to get the people to do it by their own accord. Or whatever, whether they think it's a good idea or not, they have to do it on their own, let's see, Peter Zion, I like him more and more every video I watch. Yeah, I got to get my book back from my mom. She took it on with her when she went traveling. So once I get that book back, I'll try and read into that one. Monopoly money will be real. All right. Hello, Robert. All right. In the future, the feds will turn off your UBI if you say anything negative about the government. Yeah, and I mean, I could see that being the case, but not right away. It's going to take a long time before something like that happens. And the reason, again, the reason is that they don't want people to deny it, right? So if you can do whatever you want with this currency and you face no consequences from it, you can buy firearms and alcohol and tobacco, maybe even do illegal black market purchases or something, and nobody gets in trouble for it. Like nobody, ever, not once. Well, then you'll just grow accustomed to using it, and once you get a generation of people to go by, then you can start putting the screws to them because they won't have any other choice. But at first, you can't do anything about it. You can just let it go, right? Just let it happen so that people will actually feel confidence in using it. Hey, thank you very much. What is that? Bovine scatology? All right. Thanks for the $2. UE, you're the man. Well, thank you very much. I appreciate the $2 super chat. You guys are always so supportive of the channel, and I cannot thank you guys enough for that. All right. Totally agree, and that's where the issue has been all along with the supply chain. Yeah, and that's, if I didn't work in the industry I do, I would have never have saw it. I never would have seen it. That's really the case to it. I would have had to get my information from everywhere, like off the internet, like everybody else would have done. My experience within the industry itself got me questioning. It was like, wait a minute, this is not right. This is not what everybody is saying, right? And that's what got me backing up. And I'm like, man, why is everybody falling into this, right? Why does everybody keep saying the same things over and over again when it's obviously something different, especially when it came to lumber, and everybody just wanted to tell me how wrong I was. And I'm thinking, okay, so at the end of this, if I'm right, then I must be right about a lot of stuff, and it turned out I was right about lumber. That's why I stuck to my guns with everything I do. It's just like, no, I'm not backing away from my beliefs. I mean, this is what I feel is happening. And I mean, I don't know how many times I've explained to some of my coworkers, especially there's one guy I work with. who really knows, like he's probably more understanding of the Fed than anybody else I know. And even explaining to some of the things that I've seen to him, he it's not like he doesn't necessarily uh, disagree, but I think he has watched so much mainstream media now that it's like it makes it confusing for him, because now he has this other understanding of the situation, and when I try to explain it to him, he's trying to incorporate this misinformation that he has into what I'm saying, and I'm thinking, no, dude, you got to let go of that for just a minute in order to understand this stuff. And because that mainstream narrative has pushed it out there so hard, he can't see past it anymore, and that's a bummer. I think that's what a lot of people are, and I think I would have been there just as much as everybody else was if I wasn't in the industry seeing something different, like looking around going, why, what like, this is not what's happening, and so yeah, and I think that's the way a lot of people could actually be. Most of us don't realize that the industries or the jobs that we work are very telling of the economy. And these people who are these high level investors, people who do analytics and stuff like that, they're all waiting to get the data of the information that we are living in real time. That's the difference in it. That's how come, like, the Uneducated Economist was able to call it lumber so well. It's because I'm living the industry. Like, I'm talking to vendors, I'm talking to mills, I'm talking to customers. I'm got real-time information on everything out there. So by the time the information, the data comes out, it's that stuff's old news to me, but it's brand new to everybody else, So, all right. Thanks, Pop Zoomy. I don't owe them, just bank with them. Very valuable info. Thanks for all you do. Well, thank you, Jesse. I really appreciate that. Stack a little silver. 925 thrift. Oh yeah. Hey, RE Gold. Yeah, let's set up. I'm a little busy over the next couple of weekends, but I'm gonna send you an email. Let's get together in like 3 weeks, and let's do an interview and talk about your book. All right. Yeah, and if you haven't checked out RE Gold, he has a book, 925 Thrift. It's a great way to. There's a lot of ways to acquire silver, and I think that's what this book is really talking about. It's not just the typical way of going down and acquiring silver like at the pawn shop or something like that, but to find silver pretty much all around us all the time, and different ways of actually acquiring it. So it'll be a good interview. All right, if your amount has less than 500K, then you're fine. Oh, well. America is no different than North Korea, China, Russia. We are actually identical in theory. No, we're not. And the reason is that we have the world reserve currency, and that is a major difference because it gives us a standard of living unlike anybody else has. So no, we're not the same. That's not even in theory. So I mean, if you want to talk about like government rules and stuff like that, well, okay. I mean, I guess there's a lot of similarities in that fashion of it, but as far as like the individuals here and what we experience, I think is far different. All right. If voting mattered, they wouldn't let you do it. That's right. If you have the illusion of capitalism, we have the illusion of capitalism. Yeah. All right. We vote every day with our spending. I totally agree with that. Believing in the country is pointless at this point. Yeah, and it's not necessarily believing in the country. I think it's believing in the system in which that this country is now operating in. I think the individuals, I think the individuals of this country, I think we are a very strong group in the sense that we are very innovative, right? We have something that's very different from what a lot of countries have, and it's a stubbornness, like unlike what a lot of nations go through. Like, Americans are just straight up stubborn people. Even if you were to tell them like, hey, we got this great idea, we want you to do it, it's going to be a little bit of a change. They're like, what? Change? No, thanks. Not going to do it. No, it's a really good idea. I don't care. I'm not going to do it because it's a change. Why? I don't know. Right? I mean, that's literally like a lot of people's attitude. I mean, I talk to people all the time. I am not doing it. Why? Because I never done it before. That's the only reason. That's the only reason why you won't use like your cell phone to make a purchase with or something like that. I was like, oh no, not me. I ain't doing that. Cash only. Okay, why? Why are you being so stubborn about it? They don't even know why, right? They'll come up with some like off the wall reason or something that doesn't really make any sense. And so yeah, Americans are very stubborn people. It's kind of cool actually. All right. If life goes on regardless of your politics, yeah, life does. Thumbs up. Thank you, John. All right. Don't vote, and it won't be your fault. Yeah. I think, I mean, I don't have a problem with anybody voting. Like, if you want to go and vote and play that game, cool. Like, in fact, I figure that if you want to bitch about politics, then you have to vote, right? Otherwise, don't say anything about it, right? I mean, it's not your place if you didn't vote. So I don't talk about politics. I vote locally. I think that's important. I think local voting is very important. But as far as like, it's like Oregon sucks for voting for president. We have 3 electoral votes and we do mail-in ballots, right? Mail-in voting. So by the time they count our votes, the president he's already done and been elected, given his acceptance speech and everything else, and they're like, oh, hey, Oregon, how'd you vote? And it was like, does it really matter at this point? I mean, he's already won, right? They already won, so there's no point. Toyota will invent Skynet. Did he have to spend money on his car? It has a Toyota badge, so no. That's right. I didn't have to spend barely any money on this. All right. I'm sitting here for a while now and just now realized it was live. Anyways, I feel the same about politics, man. That is so funny, bro. All right. Watch the 2-10 spread. The 2-year is falling and the 10 falling to the 10-year, not the 10-year rising to the 2-year. Recession imminent. Yeah, I mean, I'm again that the yield curve is a very good indicator. I just feel that it's been very obscured over the last couple of years. Now, again, like I'm not saying that it's not accurate. I mean that could be very, very accurate in it. It just now I question it. That's all I guess I'm saying about that. What I'm going to be looking for is the spread between the 5-year and 30-year, because this was Alan Greenspan's answer when they asked him about the 2-year, 10-year treasury or 2-year, 10-year inversion being the recession indicator. He says, yes, it's a very good recession indicator, but that he watches the 5-year, 30-year, and when you see that spread widen, that's corporate management's willingness to invest. So maybe that's the signal that the recession is over. Right? So that would be the better signal. We know we're going into recession. How do we know the recession is over? When we see the 5-year, 30-year spread start to widen. That's when I'm going to start jumping into stocks too. Like people ask me all the time, what do you invest in and stuff? That's what I'm waiting for. When I see that, then I'm going to start moving into stocks. What I'm going to move into, I'm going to make that decision then, right? Because I don't know what industries or what stocks or whatever I'm going to be going into. I just think that at that point would be the time that you would want to be doing it. So from here until then, start figuring out what stock prices or stock picks or whatever it is that you want to find or enter in at or whatever it is, your investment strategies. I don't invest, so I don't know. Right? I'm just going to be flying by the seat of my pants at that point. All right. It baffles me people buying like $30,000 to $50,000 auto loans on $500, $600 payments. Yeah, I mean, like I could afford a new car payment, like even a really nice car, like a really nice car. But I mean, I just can't see it. Like I don't know what it is that car would do for me that would make me feel better about the stress that I would have to try and make the payment. Like it would be one thing. It was just like, no, I'm totally cool with this payment because I live in this house. My family enjoys it, all the other stuff. So I don't mind making my house payment. Besides, it's cheaper than rent, right? So that part I'm cool with. But then if you were to go and put like, $600, $700, $800 or even more towards a brand new car, like to me, that would be a very stressful thing. And I would not find that enjoyable. I would find that I would find it as a burden. And then I would look at the car as a burden, Like, I look out there and I look at this Toyota, I don't see anything pretty. What I see is advantage, right? That's what I see. I have an advantage. I don't have to have a new car payment. I don't even have to care if somebody backs into it at the grocery market. Like, I really don't worry about it. That's awesome. Like, no worries. I mean, that's worth a lot of money, right? I mean, just think about that. How much would you pay not to worry, right? No worries. Love my car. All right. Status. It's vanity, stupid. Yeah, I actually like it when people make fun of my car. They're like, they look at it and they're like, laughing at my car, and I think, yeah, I ain't laughing at all the things that I could do because I don't have a brand new car, right? I'm laughing at, basically laughing my way to the bank, right? I mean, that's what I'm doing with the cash. So, it doesn't like status. What does status mean? Like, do you have to stand there and look like $1 million in order to have the status? Is that where it comes from? I mean, maybe the shallow people who don't understand, and they look over and they're like, wow, that person looks like $1 million. They must have a lot of status. I'm gonna give them a lot of like status because they look that way. Is that authentic? I mean, this cop keeps passing by me. I wonder if he's wondering what I'm up to. It's like the third time he's passed by. All right, transportation, yes. Go to European city or Sao Paulo or Buenos Aires or similar. That's not car-centric. It'll be very different with public transportation and walking accessibilities. Yeah. I've been saving all my scrap lumber. I'm thinking of getting a van just so I have something to sleep in if it comes to it. Yeah, I mean, I thought about it before. It was just like, I actually like the idea of van life, not a permanent thing, but just going for a while and just cruise around and check out different places of the country and go meet different people and do all that kind of thing. I think that would just be a blast. Like a retirement thing for me, like if my wife and I could go and like get an RV and just start, maybe like a smaller one and just start hitting all the cool places all over the country. Like that to me sounds like a lot of fun. Yeah, I don't know. I could do that. Congratulations on saving a ton of money on thrifty transportation. Yeah, I mean it's one of the reasons. It's like there was a time when I was walking to work. Like I mean I literally I was walking. I walked to work in the rain, right? There was a time when I would walk to work and I would just dream of new vehicles. I would see these vehicles pass by and I wonder how the hell do they afford those? How do they afford that one? Like what do these people do for a living? I mean, I work my ass off. I'm walking to work and I still, and then when it got to the point that I got this car, and I was really happy. I mean, I even put a video out talking about how to buy a cheap car, and I got this vehicle and I'm thinking, man, I cannot wait till I have the money to drive something really nice, and then the more and the closer I got to it, the less I wanted it, less I actually truly wanted it. I mean, like I still want it, but it's not like something that I felt like I needed in my life. It's just turned into something that I just kind of wanted. And then when you have the ability to buy one, like anything out there, all of a sudden it's like you don't even want it because you have the ability to get it. See, like having the ability to buy or acquire something is almost as good as having it itself. Like having no way of being able to acquire it gives you this desire, this need, this want, this thing that you can't have. But the moment that you can have it, then you don't want it anymore. Like it's a really strange feeling. Like when I couldn't get it, I really wanted the car. I really wanted a new one. Like I even dreamed of it, and then once it got there, vanished, gone. Yeah. That's the way it is for a lot of stuff out there. All right. Cheers to, oh, you already said that one. Okay, drive them beaters to the ground. Yeah, that's, actually, I learned that from my dad. He said, drive those vehicles till the wheels fall off. Just drive it till the wheels fall off. And he drove his cars for a long time. That's probably where I got got it from. Pine Beetles is so 2010. Yeah. All right, purchased a 2023 Camry, great on gas, will last forever, 30,000, but went without a car for 2 years because of the price. Yeah. Carman Camaro Z06. I'd rather drive crappy cars or whatever that constitutes than be super in debt with when a new car takes a crap. Yeah, and that's just the thing. Like, I mean, you think about it. If you had a brand new car, you had $40,000 car or something like that, and then you have issues with it, like it doesn't run right, there's something wrong with it, and you have this super expensive vehicle that's sitting out there that you can't even drive, right? Or you shouldn't drive or something. How heartbreaking is that? Like, that is just terrible on your psyche or whatever. Like, this thing breaks down. Like, my concern level is really low. Like, I mean, first of all, my concern level of it breaking down are really low because it's a Toyota, right? But even if it did, it's like, I'd be like, hey, come pick me up. I need to go get my truck. Like that's really where my, like, whatever. And I don't think a lot of people live like that at all. They're very worried about their car. Loved my Ranger. Yeah, I loved my Ranger too. That 95 Ford Ranger, manual transmission, manual hubs, crank windows. It was an awesome vehicle. Awesome, awesome vehicle. Four-wheel drive. I loved it. You'd put that vehicle into, like, four low, drop it into second gear, go up onto the logging roads. You never had to touch the gas or brake. You could just sit there and just cruise all day long up and down those roads, and it just cruise. Your viewers won't hate you for driving a beater Camaro. No, that's true. And I'd rather be like, really, like a Camaro, my style would be more like something 1972, primered, loud exhaust system, empty beer cans and cigarette butts rolling around in the thing. That would be like more my style. Like that would be my car, But to have a brand spanking new, like, all fancy and stuff, like, I don't even know how I feel now. It would be like I feel out of place in there. It'd be like, not me. All right. Let's see. Uneducated Economist. Last candidate I really backed was Ron Paul. Yeah, that was me too. When Ron Paul was basically blackballed out of the Republican Party during the debates and all that other stuff, I was so frustrated with the Republican Party. I was just like, you guys are never gonna get my support ever. Not for this. You ruined it for yourselves by doing that. So I was this close to meeting Ron Paul. I really should have taken my opportunity, but there was so many people, and he had like security and all kinds of stuff. But it's pretty cool because he was down at the Rebel Capitalist, and he spoke on stage to the same audience that I did. So he was on at the end of the day, I was on earlier in the day. So I figured that's close enough, right? I mean, I didn't actually get to meet him, but I got to be on stage speaking to the same audience that he spoke to, which just makes me fun. Yeah, that was so cool. All right. Why is it so sunny? Yeah, I know, right? I don't know. It's really nice today. Uh, let's see here. It's amazing what happens when you learn how to change a car's belt, the struts, the transmission fluid, the oil. You start to see how much people get ripped off at the shops. Yeah. Yeah, that is so true. Well, same thing with construction. Like, I see how much people pay to have like a deck built, have roof, skylight put in, have, all this stuff, and I'm like, I know how to do this work, and I hear how much they paid, and I'm like, what am I doing here? I could be making so much money, right? And yeah, anyway. I'm here. We can start now. Well, it's good to see you, all-nighter. I'm glad you're here, man. All right. We've been going almost 2 hours, bro. I don't know. I don't know how much longer I'm going to be out here. Okay. Juan, yes, and still running strong with it. I sold it. Okay. And is everyone going to get UBI? No. Well, I mean, if it's universal basic income, the exact name of it, universal basic income, means that everybody has to get it. If they draw a circle around a particular group and they give them a particular, that's called segregation, right? That's straight up. That's not universal. That's segregation, right? Segregation basic income when they do that. So if it's universal, which it should be, it means everybody, regardless of how much you make or what status or whatever you have, who you are or whatever, everybody gets the same amount. That's the universal basic income. That's in my opinion, right? Now, I'm not trying to come up with the ways and rules and regulations and all this other stuff on how they would implement it. I would just assume that if they did a universal basic income, then they would also have a tax on a certain wage or above that that would pull that UBI right back out. So really, it would only go down to the lower half. That's what I'm assuming would happen, right? Because if you didn't, if you just gave everybody the UBI and didn't tax it away from the rich, then they would just take that and reinvest it, and then the separation of the classes would grow even more. So they have to take it away from them, or else they would just the inequality would grow more. All right. Damn, I just tuned in. My man has been sitting in his car talking to his phone for 75 minutes. Incredible. Yeah, bro. Content creators. Yeah, thanks, man. Yeah, I've been like try to do these for a couple of hours if I can. It doesn't feel like a couple of hours. It only feels like a few minutes when I'm out here doing this, but yeah, it goes for a long time. What is my house worth? I don't really want to say it. I mean, if you go by the ZELLE estimate, it's a ridiculous amount of money. It's stupid amount. About $100,000 more than what I paid for it. From and considering that it's only been like 14 months since I signed the deal on this house, being up that much is not exciting to me. That is actually very disappointing. It leads me to believe that, again, like it just shows how irrational the price moves were or have been. And even if it was to drop the 100 grand, I would still be back at what I paid for it. And if it dropped another 100 grand off of that, I guess it would be underwater. It could drop a lot more off of that as well before I would go underwater, because they made me put an incredible down payment on the house, right? Because I had this damn foreclosure in my past. So I don't know. Like a lot of people ask me if I'm worried about like my house going underwater, my payments, and not even. Like I am so far away from like going underwater right now that I'm just not stressing it at all. And even if it did, I wouldn't stress it at that point either, because I don't plan on doing anything other than living there, right? Like if I was gonna try and sell it or do something else with it, then I would be concerned about what the value of the house is. My concern, even if I don't, like right now, I don't care what the price of the house is. All I care about is being able to make my payments on it, like as if it was rent. That's my only concern of it. Even if I was to pay the thing off, I'm going to be old. I'm going to be like an old man. What do I care if, like, 76 years old, if the thing is finally paid off or something like that. Like at that point, it's going to be, I don't know. Like I'm not stressing it. All right. What about real estate overseas? I mean, me personally, I can't really think of any place else that I'd rather be except for here. Now, I know there are a lot of people who are gonna like, say that these other countries are awesome or something like that, and they very well could be, but I like it here. In fact, I like where I live here in the Pacific Northwest. I like this little corner of it that I live in. People here are friendly. It's fairly clean. It's low crime. I mean, it's a nice place to be. It's expensive. You have to, it's expensive to live here, but to me, it's worth it. I mean, even like all the problems of Portland that you see and stuff like we don't experience. I mean, we have some experience of it, but we're not experiencing it like you are in Portland, like downtown Portland is. There you got it bad. Oh, here's nice. It's really nice. All right. This is a Toyota Ranger. No, I was talking about two different vehicles, bro. All right, my Tacoma got 164,000 miles. I love Toyota. They were the only car company to buy from. I'm thinking. Okay, my 95 Honda has 198,000 miles. Hey, right on. See, there's another good one right there. Hondas. All right, new Tacoma are going for 30 over asking. No, thank you. Credit Suisse just bail out by Swiss government. Too big to fail. The Swiss government will be bailing out Credit Suisse per reports. Yeah, I hear that one too. If you had to build a certain style of home from scratch, what would you choose? And do you watch any of the MDE stuff? I guess not. The MDE stuff. What is there a house, certain style of house that I would build from scratch? Um, I mean, are you talking for sale or for my own personal use? Because I think those would be two different things. I don't know if there's a certain style of house that I would go for. Are you talking about like the construction style or the actual architectural style, you know? Because like I don't know. Like I think that would depend on the region. It would depend on what I would want for myself if it was for sale. There's a lot of questions that would go inside of that. Yeah. So why isn't the only answer tax the F out of the rich? So why isn't the only answer to tax the F out of the rich? Have you ever wanted to be rich? Have you ever thought about how discouraging it is to try and make a bunch of money to only have the government come and take it all from you? Like, why is it that I would try to put businesses together, try to hire people, try to be profitable when every time I do something like that, it only becomes disgustingly worse for me the more I do? So, what incentive would you give people to become rich? Let me ask you that, since you don't mind taxing the F out of them, right? I mean, since that's the logical answer, what do you think would be encouraging for you to become rich? What would encourage you to do that if you're just going to have the F taxed out of you? That's my question. Like, I would love to be rich someday, and I don't want to have the F taxed out of me, right? I would like to become rich and be successfully rich and be happy about that and not have a bunch of people who didn't earn it vote on a way to take it all from me. Like, that doesn't sound appealing to me. I don't have any money. I am broke. I would love to be rich. I don't want to have the taxes of the rich to be so burdensome that it discourages me from becoming rich. Right? I mean, does that sound illogical? Does that not make sense? Or is that just completely like asinine thinking? Okay. Let's see here. Bidenflation. Oh, you like blaming Biden? Yeah, that's, I guess, a good scapegoat. I mean, if you can blame him for creating the problem, can you blame him for solving the problem too? So if things go back and you end up being happy with the economy, you're going to go back and thank Biden for that? I mean, just curious. I'm not blaming him one way or the other because I don't think he has anything to do with it. In fact, I can't think of a single thing I've ever heard that guy say, ever. Like, if he came on the TV or like anything I was watching or something, like he was speaking, I stopped listening immediately. Like, there is not a single word that that dude has ever said that I think I paid attention to, ever. Right? I think what's going to happen is no matter what happens financially with bailouts or governments or banks, society is too connected and aware that the perception of money's magic is gone. I think to those of us who are aware, I would agree with that. But we are very small minority of people. Most people have no clue about the monetary system or how it works. I mean, hell, most people think that our money is backed by gold. So I don't know. I don't think people are going to wake up to the monetary system ever. Like, I just don't think they will. You know. Close call on global economy. Wow. True, it won't come right away. Will silver gold pop soon? I mean, I wouldn't be surprised to see him make a decent move. Like, I wouldn't be surprised to see gold go up into a new all-time high, and I wouldn't be surprised to see silver achieve its all-time high of $50 an ounce. But those crazy wild, like, numbers that people talk about, $10,000 an ounce gold or, $500 an ounce silver or something like that, I don't. I don't see that happening. The only way I see that really happening is if there's somehow they give up on the paper derivatives, or if there's like an industrial need, somebody is looking to build cell phones, computers, or something, and they simply cannot acquire the silver, then I could see where there could be a huge disconnect from the paper price, like the spot price that we see, to the physical. And at that point, physical might carry a huge, huge premium that's beyond that of the spot price. So you might see the spot price at 20, but then be able to sell it for like, 50 or whatever. I mean, I could see something like that getting that obscure as they try to hold on to the paper, derivatives market. But if it gets to a point where manufacturers are just paying anybody to get the silver so they can produce their stuff, then the physical price will break away. Yeah. Which it already kind of does anyhow. I mean, when I was first buying silver, I mean, premiums were like 50 cents or $1. I mean, now premiums are huge. I mean, shoot, what, anywhere from $5 to $10 or something. I mean, some ridiculous amount. All right. Just parked. Hey, Big Hill. Right on. Good all-nighter. Shout out to the Gerald Celente for being the good father of predicting a lot of this stuff. Yeah, I followed Gerald Celente for a very long time. One of my favorite guys out there. Yes, thanks to all the super chatters. Thank you, man. That's very cool of you. Check out the 925 Thrift, your silver treasure map. Yes, absolutely. All right. Do you understand how tsunamis work? This is how the economy works as well. COVID and the stimulus included PPI and other free cash handed out. Was the earthquake, inflation, or aftershocks? Okay. Okay. Well, it's an okay analogy. I think we need a little bit more detail into that. All right. If the internet wasn't around right now, me and everyone on here would be taking to the cleaners every 10 years because we would have taken Jim Cramer's advice. That guy, has he ever? I mean, I don't understand. Like, I have a hard time even listening to him. Like, I watched his show a few times, and he's so excited and he talks so fast. I literally have a hard time like understanding the words that are coming out of his mouth. Like he says something and I was like, all I hear is garbly-gook. Like literally, like I can't even like try to even imagine what it is that he just tried to convey. And so I stopped. I don't even bother. Like I can't understand what he's saying. Like straight up. Hit the like button. Thanks, UE. Well, thank you, Kurt. I really appreciate that. Yes, please do hit that like button. We have, well, I don't know how we can. We got 356 likes and 348 of you up in here. So we got more likes than we have viewers right now. That is so awesome. All right. Just relax and let it happen. Whispering in ear. Yeah, and I'm learning a lot about letting go. Letting go of outcomes is a really it's been a not necessarily like the game changer, but it has been an incredible relief to let go of outcomes. Like the success of the YouTube channel, making money on the YouTube channel, the need to put out a video every day, right? Like all this stuff, I'm starting to let it go. Like I don't have to put out a video every day. Like I try to, I want to, but if one doesn't come out, it's not the end of the world. Right? You can let it go. It's cool. It's nothing to stress about. Tomorrow is another day. You get to do one, right? This is the type of thing that I'm trying to carry with me in everything that I do, is to just let go of all the outcomes. Like you can have goals, you can have, ambitions and stuff like that, but the consequences of it not occurring the way that you were anticipating, I'm letting that go. Right, letting go of everything like that, and it's making things a lot easier. I mean, and I think that's really where I think a lot of people end up like suffering with a lot of stuff. Well, what do they say? Like, desire is the root of all suffering, right? That makes a lot of sense, right? Because when you desire something, you're anticipating an outcome, right? You have this like particular thing that you need to happen. And that's a need, and that need is a want, and a want is a negative energy, just like anything else out there. Wants and needs are negative, right? And so if you don't want it, if you don't need it in your life, but you simply just kind of move towards that goal. Like, you know, if you get it, maybe, maybe not, whatever. I'm going to take steps towards that, right? And if I get it, cool, right? Well, generally, if this is the attitude that you have towards something and you start walking towards it, you get it, right? You end up walking right towards it. If you have this needy energy towards it and you start moving towards it, it starts moving away from you, right? Like the negative energy will actually repel that in which you are trying to acquire. And so letting go of everything out there, right, gives the ability for it all to come to you. And that's, and the more you incorporate this into your thoughts and your life, the more you'll find it happening, where you just like let go of outcome. You know, you want, you know, this particular, you know, thing to occur or whatever it is, like maybe even like into like the dating scene, you want to, you know, go out with this one particular girl or something like that, or guy, or whatever it is that you're constantly like pushing towards this, and you want it, and you're gonna push that person or whatever away because you're giving them this negative energy that's going towards them. If you just wanted to just truly be in their presence, just like not with any kind of anticipation of anything occurring, just to be there and to enjoy their presence, and that's it. Well, that's not a negative, needy thing, right? You know, that's actually a pleasant thing. You know, usually most of the time, if you are enjoying your environment, you're enjoying the people that you're doing that with, then everything flows the way you're anticipating it. But the moment that you anticipate an outcome, then you start putting that negative out there, and then everything starts getting repelled, and you get this, you know, weird feelings and manipulations and all kinds of stuff start happening from that. All right, moving on. Yes, please, stimulus that like button, please. Yo, stimulate that like button, please. Thank you very much, all-nighter. All right, there are a lot of people that only talk about the Fed, angry at them, tunnel vision. Well, again, okay, the Fed is my problem. The Fed is the reason why. The Fed, they're the ones to blame. Keep pointing at the Fed and telling them that's the problem. There it is. Well, you're blaming all your problems on an external, right? If the Fed was different, if the government was different, if the and that and all this stuff was different, then my life would be happy, right? So I have taken, like a lot of people say, dude, you're just shill for the Fed, right? You seem like you're on board with the Fed, like you enjoy what it is that they're doing, like you like the idea behind it all. And I think to myself, why would you think that? Like, what in the world gives you the idea that I'm on the Fed's side? Like, I can care about the Fed, like what they do. Like, I think about this for just a second, and I come back, and I'm like, okay, I understand the Fed, or I'm trying to. I'm trying to understand their strategy. And if I can understand their strategy, then I can position myself to best take advantage of that strategy. I'm not on board with the Fed. I'm not against the Fed. I'm neither here nor for, right? What I'm trying to do is understand the Fed. I guess in reality, what I'm trying to do is make the Fed my bitch, right? Like, if I can understand what the Fed is, then I'm going to do things that when the Fed moves, it benefits me, right? That's what I'm going to try and do. I don't know if I can do it. I'm going to try, right? That's my whole like goal behind it all. But if that's the case, then I'm not angry at the Fed, or I'm not approving of the Fed. The Fed is just what it is, and I understand, or trying to understand what it is. And if they move and it screws somebody's life up, that's not my fault, and it's not their fault, right? It's the person whose life got screwed up because they didn't understand the Fed either. And that's the way most people are. So when they end up getting hurt, you know, and they just want to blame somebody else because they didn't take it in for themselves. They didn't understand what was happening. And so if you don't understand it and you're fearful of it, then you're going to start pushing blame out there, and that's what a lot of people do. If you get angry at the Fed, it's because you're either hurt or you're scared. That's it. There's only two reasons why you get angry. You're either hurt or you're scared. Right? So if you're hurt or you're thinking about being hurt, that must mean you're scared. Right? So if you're hurt, you've been damaged. Makes sense. You shouldn't have been hurt by the Fed. You should have understood what was happening and positioned yourself so you didn't get hurt by them. And if you're scared, it's because you don't understand them. And you're in fear that you're going to lose everything due to their actions. Hurt, scared. That's the reason why they're angry. I'm not angry. I'm not angry at it. I'm neither hurt nor scared. How did BlackRock turn into a shadow bank? You know, I mean, you do realize like the difference between a shadow bank is not the same as a shady bank, right? A shadow banking system just means it's a private money banking outside of the Federal Reserve banking system. Like most loans, like most mortgages and stuff like that, are written in like the private banking industry and then sold, right? That like, you know, you Quicken Loans and all these are private banks, these are private mortgages, these are private money, and this is like the shadow banking system, the shadow mortgage market. There's shadow banking, shadow currency that exists outside of the United States, right? It's contracts written in dollars, right? These euro dollars. That's just like a shadow currency system. It's not shady, it's just not part of the government banking system that they have set up, the Federal Reserve System. It's just, you know, it's basically private money, you know. All right. I'm in Black Rock, Arkansas, all-nighter. Kicking it down in the South. All right. Thank you for the info on lumber. Yeah, you bet. Like, you know, that's the one industry that I definitely know really well is lumber. And it's funny because I love it when people argue with me about lumber or try to, you know, tell me what it is that's caused the lumber prices to be where they are. And it is so funny because people will talk like they really understand what they're saying. And I listen to them and I'm thinking, man, you have no idea how foolish you sound, you know? Because, I mean, what they say makes a lot of sense. And from their perspective, it's like totally like is the reason. Like, and I mean, and everything makes sense from their point of view. I mean, like all of it. It's just that there is so much information that they don't know that it makes, you know, it obscures their reality and they don't really see it for what it is, you know? And that happens with a lot. I mean, I think I'm facing that all the time. Like all the time I'm thinking, man, there's something that's going on. There's something that you don't know, right? You got to know that there's something that you don't know that's happening right now. And so that's what I'm always kind of thinking. Like, you know, this is like I'm always waiting. This is like, where's that thing that I'm not seeing? Where's that one thing that I don't know yet that I didn't know, you know? Right on. What is that? Elias? Elias for the $4.99 super sticker. Thank you so much, man. You guys are always so supportive of this channel, man. Yui does know his wood. Yeah, I do. Like I said, like when it comes to talking lumber industry, when it comes to talking lumber and all that, like I really feel like I'm pretty much at the top of the game when it comes to that. Like I will debate anybody about the lumber industry. I mean, I think I've covered pretty much every single corner that could possibly be covered in the lumber industry. You know, there is stuff that I get information all the time that, you know, stuff that I wasn't aware of. I love talking with Keta from Madison Lumber Reporter. If you have not seen that video, that interview, it's a little in depth. It's long. It's an hour. But if you are interested in the lumber industry and what's going to be taking place over the next year, you have got to watch this interview that I did with Keta. I mean, it was so good, and it wasn't that long ago. It was like last week or the week before I posted that. So you can just find that in my recent videos. And I really encourage a lot of people to go and watch that. I mean, it's just good information anyway, even if you're not into the lumber industry, just kind of understanding what's going on as far as like not necessarily mortgage, but new construction, the home builders, stuff like that. She had so much good information, and yeah, I'm gonna interview her again here in a couple of months. So, and I'm gonna try and have her on the show as often as I can. All right. What do you see bakeries in the house? What is that? Bakeries in the house construction market this year? Baker. I don't know what that is. I'm sorry. I'm trying to understand what you were asking there, and maybe I'm just getting tired here. Let's see here. Hayek was right. Yeah. All right. Your content brings about a lot of Tea Party individuals. You're on the right track. Don't let the noise drown you out. I'm not, man. I mean, you know, there's a lot of people out there who can make a hell of a lot more noise than I can. They have a lot more attention, and they definitely have a lot of credibility out there. You know, it's not easy being just the regular dude working at a lumber yard, busting out macroeconomics videos from a busted down Toyota and try and stay on the high level. You know, I mean, there's very few people out there who are doing. I mean, there's a lot of people who are doing it. It's, I mean, I don't even know quite how to say this, but I'm gonna, like, I am not taking on the idea that you have to be rich, that you have to be an investor, that you have to be a businessman, that you have to be a politician to understand this stuff, right? For some reason, it seems like the macroeconomics understanding, a lot of people just think that it's so far over their head. And I'm telling you, it's not. Like, I barely graduated high school. I've read like literally 6 books in my entire life. All the information that I've gotten off of the internet. I've gotten from reading Fed speeches, reading, you know, if there was something that, you know, was in a speech that I didn't understand, I would read it over and over again. I would research it until I finally understood what was happening. This stuff can be learned by anybody. Like, you don't need to go to school to figure this thing out. And, you know, I found that the more I learn about this, the more I realize that a lot of people are just regurgitating things that they have heard from other people. Like, very few are actually taking on their own economic theory. They're taking on somebody else's economic theory and then trying to prove those theories or disprove them or whatever it is. Um, that's why I think my content is a little different from everybody else's, because I'm not trying to follow any particular path. Like most people, when they learn economics, they start off with the base, right? They said, okay, here's your, you know, whether you learn like Austrian economics or, you know, Keynesian economics or, you know, something, you started off with the base, right? And you're like, here's the economy, this is what you learn. And then you start like kind of gathering all this information from there onto this base that you have, right? I didn't have a base. I didn't have anything. Like, I mean, I started off asking what the mortgage-backed security was. That was my first question into the realms of what's economics, was what's a mortgage-backed security? What's a credit default swap? So that's where I started. And like, I was like trying to, it took me like a week to figure out what the hell a mortgage-backed security was, right? And same thing with credit default swaps. And this is what I started off at, you know, and then I just kept putting pieces together and just kept dropping it in there. So it was like Keynesian economics. I'm like, what the hell does Keynesian economics mean, you know? Study up on Keynesian economics for a while, study on Austrian economics for a while, study precious metals for a while, study cryptos for a while, study treasuries for a while, study supply chain issues, study this, study that, whatever, you know, just whatever came, just keep studying on it and just keep putting these pieces together. Somebody would say something and I was just like, you know, somebody would say something like the sovereigns, you know, found a bid today, you know, and I was like, what the hell does the sovereigns mean, you know? And so it would take me like, you know, sometimes I'd have to research for a while just to figure out that the sovereigns was just talking about sovereign debt, you know, the bond markets of all these different nations out there. I didn't know what sovereigns meant before, you know, but now when you hear it, it just, you know, you just know what they're talking about, you know. You talk about the debt market, talk about sovereigns, talking about, you know, yields, talking about, you know, par value of stuff. You know, you realize that they're all talking about the exact same thing. They just have all these different languages that they use when they talk about it. You know? And that's how I was able to do this, you know, and come out and talk. Um, you know, that's where I think my channel really differs from everybody. Is just that I didn't learn it from an investment point of view or a business point of view or even from a classroom. You know, I just kind of absorbed it all and just started talking about it. Did I get another super chat down there? Oh man, look at all these comments. My gosh. Okay. P5K Psalms. Paul. Let's see. Hi, thank you for the 5. What is it? SGD? What's that? Huh. Hi Simon. Do you think the Fed will raise rates next week now that 2-year has de-inverted? Glad I caught your live. Um, I don't think the Federal Reserve is going to be pivoting until the unemployment rate starts to rise significantly. And like we talked about it a little bit earlier in the live stream. The Federal Reserve has two mandates, right? They have a dual mandate of full employment and low and stable prices of around 2% average inflation rate over time, whatever that part's supposed to mean. I'm still confused by that. But the full employment, the Fed achieved that. Right? The Fed has achieved the full employment. Now it's the other part of their mandate, the low and stable prices. Interest rates will stay elevated so long as there's full employment and the inflation is running rampant, right? So if that's the case, the Fed's not going to pivot. I don't care what happens with the debt market, what happens with the housing market, what happens with bonds, all that, none of that stuff matters, at least in my opinion at this point. The thing that the Federal Reserve is going to be concerned about is whether or not they are achieving their dual mandate. And until they have actually got the unemployment to rise, right, to bring the inflation down. I mean, I guess this is kind of the idea behind it. So until they get the unemployment to rise, which will then in turn bring the inflation down, they're not going to pivot. I just don't like all kinds of chaos and crap is going to happen in the banking system. And even if the banking system was to get worse, they're going to be like, oh, hey, by the way, in addition to the bank term funding program, we have this other useful tool that nobody ever heard about that we are now going to introduce, and it's totally going to save the day, and the confidence will be built, right? That's what I think is going to happen. Like, the Fed is not going to adjust their interest rates. Not in my opinion. All right. Yukon Cornelius, awesome. I have replaced all the suspension on a RAV4 soon. Okay. Lost my software engineer in December. Honestly, super bummed out and glad I have. Oh, super burned out and glad I have been stashing savings for the last 6 years because I really don't want to work for these companies anymore. Thanks, PK5. Well, thank you, All Nighter, for that. My 85 Dodge has 900 miles on the odometer. Uh-oh, Simon, what do you think about replacing income tax with consumption tax? Well, that's kind of the way I've always felt about money anyway. Don't charge me on the money I earn, just charge me on the money I spend. I kind of agree with that. That way, if you don't want to, if you don't agree with what's being done out there in the government and taxes and the way they're being spent, just stuff, that's easy enough. Just quit spending money, and then you don't have to worry about, your tax dollars going somewhere. All right, love that broken odometer, Big Hill. Yeah, right. It's rolled over a few times. I used to have a 200 or 2000. There we go, 2000 Civic that finally died at 236,000 miles. It was a great car. Yeah, I bet 236,000 is a great amount of miles to get on a car. Thank you, Bing. Oh, that was probably All Nighter asking where the dice are at, huh? Sorry, All Nighter. He just sent me a private message there, but I just saw the push notification come in. All right. Thank you for being a small business owner. Thank you. Being a small business owner is so unworth it at times. Yeah, I have seen a few of my friends who are small business owners struggle. Like, there's times when they're really excited about it, and then there's a lot of times when they are not. Like, they are like, why in the world did I do this, But, when it's going good, it goes good. Simon, you just own the F out of the tax the rich question guy. I didn't mean to give you like I wasn't trying to just beat up on somebody. That's not what I was going about. It's just that there were so many people who have like this absolute hatred for the rich, and I'm thinking, why in the world do you hate people for being successful, right? I understand that they have a life that is far better than what most people end up with, right? And people who have struggled their entire life, yeah, I can understand the frustration behind it all. But to be disappointed or to blame somebody else for being successful only means that you will never get it yourself, right? So I'm never going to blame somebody for being a success, right? Because I want to be a success. And I don't want to find success to be something bad. I don't want to even people out there who have been successful, I don't want to think them as bad. I want to think them as good people, honest people, hardworking people, because that's what I want to be, right? Now, I understand there's plenty of people out there who are not that, who are not honest, who are not hardworking, who definitely have that position in life that is going to be frustrating for us down here on the lower end, okay? But again, I'm not putting my blame on an external. Like, if there's anybody to blame, it's right here. I can deal with that. But I can't deal with the fact that somebody else has a problem, or I have a problem with somebody else. Because if they can't change, then my problem won't change, right? So they're no longer my problem, no matter what it is out there, right? I'm letting go of all those issues out there that people have, or that I have with people out there, because I really don't have problems with people, ever. All right. It's perfectly logical. Okay, I didn't think it was possible to own somebody that much. All right. Michael, do you want to crawl under my house and replace fittings for $200 a pop? Repairs versus new install is the different ball game. All right, mo money, mo problems. Yeah, man, that's so funny too. It's just like, when you don't have money, you have problems. And when you end up with money, even though it's not like a lot of money or anything, you get money in, and then you get a whole different set of problems. Like, it's completely different type of problems. It's like before you're like, man, I have all these problems because I don't have money. And then you get the money, and now you got all these other problems. You're like, well, money doesn't solve anything. It just shifts problems to another spot, Okay. Uneducated Economist would probably zone out of Biden was talking directly about him. If Biden was talking directly about me, I wouldn't know. I mean, somebody would have to tell me, and then I would ask, what did he say? And my concern level of it would probably, again, be pretty low. I wish our money was backed by gold. We should go back to a gold standard. Yeah, I mean, hey, I'm down for that. Like, end the Fed, let's go to a gold standard. I'm cool with that. However, I don't know how that would happen. Like, the amount of damage that it would create, especially not so much for like the younger people, because they can adjust and figure it out. Right? It's the older retiring people that would end up suffering in mass pain and poverty, because they are given a promise that somebody else is going to pay, right? And the moment that you go to gold, you won't be able to make that promise anymore. So they're going to end up losing on pretty much everything out there. Now, I'm prepared to deal with the gold standard myself, but I'm not prepared to try and deal with a massive amount of people who are going to go hungry and start losing everything that they had because they don't have a retirement being paid to them, right? I'm not prepared to deal with that. Like, I'm prepared to deal with myself and mine, but everybody else out there is going to have to be on their own, and they're going to see a lot of suffering from that. Let's do it. Let's go back to the gold standard. How do you plan on doing it? That's another question. Like, I have no idea on what it is that you would do. You would have to take all the fiat currency and start buying gold with it. How about we issue out treasuries backed by gold, right? You could even do a partial backing of U.S. treasuries, with gold. There's ways that maybe you can introduce a cryptocurrency that, maybe a third party claim to gold. There's some of those out there, and just start using that. And then Triffin's dilemma wouldn't happen. So basically, there's no way. There's no way you can do it. I mean, not with an easy transition. If you had competing currencies that were next to each other, the good one would drive out the bad one, right? So basically everybody would end up just like trying to dump all their bad currency and hold on and hoard the good currency. So you can't really even have a dual currency at the same time. I just don't know how you would do it, right? Transitioning from gold into fiat, that's easy. But going from fiat to gold, yeah, not so easy. Hey, Scratchy. I don't know. Biden saying America could be described in one word was priceless. What what did he say? I don't even. How did he describe America in one word? I missed it. What did he say? Uh, the best Biden speech ever was the corn pop speech. I have no idea. I have no idea what you guys are talking about. All right, manipulated currency helps to make life too busy to learn about the monetary system. Yep, that's right. $1,000 an egg. In fact, Corn Pop speech was one of the greatest speeches in history. I have no idea what you guys are talking about. All right, every ounce of silver has been sold 363 times on paper. Holy moly! Hi, Simon. First time listening to live on your channel. Well, thank you very much, John, for being here, man. I really appreciate that. Hey, Scratchy. All right, UE was all right. UE, that was me and Clinton. I saw him and changed the station. Yeah. No paper. Welcome, John. Howdy, all nighter. Man, not live, but hey, I see the star next to my name. Gerald Celente starts off so nice and sweet like a grandpa, and then he turns into a raging demon. Yeah, I find that I kind of do that myself. Like, I start off the videos really cool, and then by the end of it, I'm all like, aggressive. And I'm like, how did I do that? You know? All right. Fed now, aka CBDC, already slated for July. All right, analogies are nice, but often lacking. Yeah. Salente gets very passionate. Yeah, he does. He's great for a laugh. Damn auto miscorrect Salente. Yeah. He was drunk the other day on live TV. Yeah, I've seen I've seen Salente. I've seen him buzzing pretty good on some of his videos back in the day. I remember one he had he had some, and he was like kept going for his drink, and I was just like he was dancing too. I can't. I mean, it was so long ago. It was a funny video. Uneducated Economist. He is insane on how wrong his advice is. I haven't listened. Like I said, I haven't listened to a lot of economists over the last probably 2 years or so. And Gerald Celente, he was a big mix of guys. I was listening to Gerald Celente, Doug Casey, Peter Schiff, this YouTuber called SGT Bull was the name of his site. Man, this guy was good. He put out a lot of good videos there a long time ago. I don't know whatever happened to him. He might still be putting out videos. But those were like my guys. Gerald Celente, Doug Casey, Peter Schiff, SGT Bull. I probably listened to those guys like every single day for years and years. Yeah. All right. And I got to meet Doug Casey too. I met him at the Rebel Capitalist. Got to shake his hand. All right. Nice day out. UE always commands a great like to the viewer ratio. Yeah, thank you very much, man. We got 417 likes and 316 people up in here. That's awesome. All right. Calling question on the dice. Can't figure it out. He's letting go of the dice too. I learned investing in technical analysis after a back injury, then found you and George beginning of COVID, and you both taught me how to think for myself about macroeconomics. Thanks. Yeah. You know, George is an awesome dude, man. I mean, I can't thank him enough for, you know, for the things that he has done to help me out. You know, I mean, really, he doesn't like I thank him and he's like, hey man, don't worry about it, man. You know, yeah, we're happy to do it, whatever. You know, inviting me down to the Rebel Capitalist and doing all that other stuff. I mean, he's just such a cool dude. I mean, it really changed a lot. Like, I mean, giving me that opportunity and not even I mean, he didn't even ask me what I was going to talk about. Like, he just had so much confidence in me to just get up. He was like, there you go, man. There's the mic. There's the stage. Go up there and do it. Like, he didn't even know what I was using. Like, you're going to talk about lumber, right? All right, cool. There it is. Go for it, man. He didn't ask anything about, like, I could have gone up there and just completely bombed, and he wouldn't, like, he didn't prep anything ahead of time. Didn't want to know what I was going to talk, nothing. Like, he was just gave it all to me. He was like, there it is, man. There's the mic and the stage. Go for it. And, man, I mean, talk about an experience. I mean, talk about having that under your belt, having that on your resume of things that you've done. I can't thank him enough. It was absolutely incredible. He could have done that for, there's millions of people out there, and, he offered it to me that day. What happened to the blue fuzzy dice? I got him up. Man, this chat must be way back there. Okay. No shirts, no dice. Okay, I got the dice. Let's move on. All right. Credit Suisse borrowing $54 billion from Sweden investors. Will Credit Suisse collapse? I don't know. The dice are at the pawn shop. Okay. Can't be poor to sell fuzzy dice. Like, okay, what's with the whiteout through the car windows? Well, it's just because of how bright it is outside. So there. Does that look a little better? Okay. Those particular dice are very valuable, yeah. And natural gas going to get cut off in Washington. I don't know. Those type of predictions, I don't know what's going to happen with that kind of stuff. I mean, anybody's guess, I guess. I don't know. Like, I couldn't tell you what's going to happen with the natural gas or anything. Let's guess the Christmas tree air freshener instead. Yeah, do you know what flavor it is? It's vanilla aroma. I wonder if I have any more. That thing is probably out. I thought I had it. No, I do. I got a new air freshener right there. So, hey, Jason, thank you very much for the $6.99 Canadian. Oh, no message? What happened? Why did it get retracted? Thanks. Well, thank you for the $6.99 Canadian. I appreciate it, man. Only the dice are getting detailed, not the car. Resisting CBDC is futile. It kind of is. I mean, I suggest everybody get in as much cash and gold and silver as they can, but the idea that you're not going to be able to, or that you're going to get out of the central bank digital currency is just not going to happen. The vanilla aroma. All right. Get my car smelling good again. Okay. Very old-fashioned Buddhist. Yeah. The Fed pivot is not coming. Bank of Canada already paused a month ago. Stroke that button, guys. If they pivot, hyperinflation is certain. Laugh out loud. Till it stands at attention, Doc. It's definitely the new car smell. Eurodollars will not be bailed out. Understanding the Fed needs a lot of time and research. Most people aren't economists. That's why I am here. Yeah, and that's really where it really does take a lot of time of studying it every day. Like, I mean, I was reading or I wasn't reading it. One of the other people I was working with on their break was just looking at some news articles, and they're like, hey, look at this. It says something like Biden nationalizes the banks or something like that was the headline on it. And then talking about the bank funding, the bank term funding program. And I'm like, Biden, wait a minute, that wasn't Biden who did, and that doesn't even nationalize the banks. This is not making sense, right? But yet, he was reading this article and that's what he believed. So he walked away with that headline thinking Biden nationalized the banks. And that's now what he believes, And I'm like, well, did you go and read what that thing was? I didn't ask him about it, but I'm thinking, did you go and read what it was? Did you read where it came from? Did you realize what it was all about? And no, he's just read that article, and now that's his truth, and that's what he's going to walk around with, is a belief that Biden nationalized the banks. All right. Hey, right on. Thank you very much, Composite Operator. Hello, UE. The last move, the Fed, the PTFP, the collapse of the SVB is an ideal situation for the Fed. SVB is the lifeblood of many unprofitable tech companies and pay high salaries. Do you think the PTFB is more sinister than we think, a stepping stone to the central bank digital currency? Yes, I do. But I don't know if it's necessarily like the step towards it, or if it was just the obvious tool that they need in order to deal with the fact that we are going to have some banking issues coming into the future. Now, I don't know how big of that program is going to get. From what I understand, they really don't have it funded with a lot of money right now. Not enough to cover like an entire banking system collapse. But the idea behind it all is that these banks, in time of liquidity stress, won't have to sell off their assets, but then just take out loans against them, so they can borrow money using those things as the collateral, as opposed to selling them out there on the market. Now, again, like, is this a preliminary to a central bank digital currency? I don't know if that's going to lead to the central bank digital currency. I think what this is going to do is create a situation in which that the Federal Reserve is able to provide liquidity to the banks when typically they would normally have to start selling off their assets or falling into collapse because of it. They're able to prevent that from happening with these loans. Now, whether or not it's going to be successful to the point that they can prevent it from happening, or if they can prevent it from taking place on a massive scale with it until the next issue comes up and the next tool comes out. Does all that make kind of sense? I don't know. I mean, I think this is just another pressure relief thing, right? As the banks begin to collapse because of the high interest rates, they're able to prevent it from like just contagion effect taking place. They can isolate it down to a single bank by giving them loans or something. Again, like it's still new, so I'm still trying to wrap my head around all this stuff and how it's going to actually play out throughout the next couple of months. So it's really, it's really speculative, and just all theory, until it actually comes into practice. But 61 minute shorts is fine. Alrighty, guys, how long have I been out here? Quite a bit. I'll give it another 10 minutes and then I'm going to head on home. Alright, this candlestick, that candlestick, the death cross, this moving average. Alright. We have our own lingo, don't we? Alright, what happens with bonds? What can happen with bonds? Well, I don't know. I mean, are you talking government bonds or corporate bonds or municipal bonds, or what kind of bonds? Sovereign bonds from foreign countries? There's all kinds of bonds out there. I mean, I'm not sure what are they going to go up, down, sideways? Are they going to default? I mean, that's what's going to happen with bonds. I don't know. You can never have enough charts. All right. Yes, sir, we do. Prices will go up with falling rates. All right. Or they like inflation. I always have a hard copy backup of my yacht when it comes to charts. Can't put old trust into GPS and Lorne. Consumption tax hurts the poor. Will there be eventual oxygen tax? No, just CO2 when you exhale. Alright. 5 all-nighter? Finally, calling 5 on the dice. Alright. I have a small 40-acre longleaf pine stand in North Carolina ready for harvest. 2 years. I'm thinking I'm going to let them grow. Yeah, I probably wouldn't be cutting timber right now. All right, what time is there? I'm in New England. It's 10:15. Right now it is 7:37. Bought plywood yesterday, not cheap. Yeah, the CDX is starting to tick up a little bit. Could frivolous government printing of money actually be a means of redistribution of wealth and creating a more equal society despite the short-term negative consequences of inflation? I don't think so. I think all the money printing, I mean, you got to understand our standard of living is increasing no matter how difficult it becomes. When you have the homeless out there talking on cell phones and doing, like, our standard of living is quite increasing. Now, as far as creating a more equal society, no, I think it's separated the rich from the poor even more. I think it caused a more of a separation, not a greater equality. That's cool. Seeing your post, you're solid. Thank you, man. Um, Kanye should open up a bank and trigger the bansters and trigger Kanye. I never heard of her. I don't know who that is. You are a success, Simon. Well, thanks. I'm thinking I'm trying, right? I mean, this is the journey, right? We're trying to become successful. As far as a success, like, I think I've achieved certain goals that I've succeeded at. But as far as the success, I have a long ways to go. Like, I'm still not quite to what I would feel would be like successful, you know? All right. Uh, I'll bank at ye bank. Kanye did muck up the words if nothing else makes you think. Alright. I love it when I see my neighbors successful. Like the IRS. Won't wealthy individuals find ways to protect their wealth, such as investing in assets that appreciate faster than inflation, while the poor and middle class individuals bear the brunt of inflation? Won't wealthy individuals find ways to protect their wealth, such as investments in assets that appreciate faster than inflation, while the poor and the middle individuals bear the brunt of inflation? Yeah, sounds about right. What do you think about consumption tax as opposed to income tax? Yeah, we kind of talked about that one a little bit. Yeah, I mean, I feel that, that's a good way to go about it. If you're going to tax me on the things that I buy, and if I don't want to pay taxes, I won't buy anything. Yeah. So that seems reasonable, but then again, I don't believe in governments anyway, so I'm an anarchist and I don't think taxes are fair anyway. All right. George has earned my loyalty also. Yeah, mine too. Will excessive money printing lead to a loss of confidence in the government ability to manage the economy, which could lead to political instability and loss of trust in the currency? Lead to confidence. Yeah, yeah, oh, yeah. I mean, eventually. I mean, when do you think that's going to happen? That's my question. Like, I think that's going to happen. I just don't think it's going to happen tomorrow. And I don't see the signs of it happening tomorrow. So, I mean, if you're talking about an inevitability, yeah, I mean, that's true. But, like, how long are you going to wait for that? You know? I mean, are you taking on a strategy that is using that as the end result? Or you, like, working with what is actually happening today, not what you feel is happening sometime somewhere. I mean, it's like, I mean, I believe it, but I just don't see it. So I don't fall into that strategy of like, that's the way I'm going to conduct myself. Upper middle class salaried gets hit hard, especially because their extended family always needs help. Upper middle class salaried gets hit hard. Yeah. Um, Yeah, that's true. I mean, they get hit hard because they have a lot farther to go, right? So, if you know, the bigger they come, the harder they fall. All right. Here's the drift, UE. Thank you. That's a great. Love, Terry. Okay, the gold is sitting in the vault at $42. They can set any price in revalue. Russia, China, India got gold. Do we? Digital dollars. My worst tax, vacant lot registration fee over $750 a year on top of my property tax in Long Beach, California. You've doubled taxes for owning vacant bare land in Long Beach, California. Wow. Oh, man. Partially backed being confidence discovery. How much does it take to fool the fools again? In Long Beach. Turn the empty lot into paid a parking lot. Corn Pop was a bad day. I still don't know what you guys are talking about. I have no idea, but I'm going to have to go look that up or something. But if Biden's speaking, I guess I'm going to miss it. So, alrighty, guys. I'm going to have to jet out of here. Did I just see? Oh, there it is. Oh, thank you very much, Angel, for the 99-cent super sticker. That is very cool of you. Let me look for some more super. Here we go. Jake Northwest for the $2. Why is this not 2008 but worse? Okay, so 2008 was a very different story because 2008 had a bunch of mortgage-backed securities that were toxic, that was dragging down the banking system. That is very different from rising yields and dropping of asset prices. These toxic-backed securities was a systemic problem. So with the Federal Reserve, when they did quantitative easing, they were buying those toxic mortgage-backed securities off the banking system to keep it from collapsing. That's not happening today. That's not the case. Right? Jake, $2. Is this not like 2008 all over again, but worse? Yes, it's worse. But it's not like 2008 because 2008 was a mortgage-backed security crisis. This is a sovereign and corporate debt crisis. Big time difference, right? Big time difference. Thank you, All Nighter, for keeping track of these for me. Do I still have a few more down there? Nope. Okay. All Nighter, did I miss any super chats? Never heard of her. Yeah. All right. Make me a shirt too, please. All Nighter Hider, poop finger, don't you have a wrench? Now is the season to get the summer seatings going in the windowsills. Yep. You're good on the supers. Thank you very much, All Nighter. Thank you everybody for hanging out with the super chat today. Thank you for the super chats. Thank you everybody for hanging out for the live stream. Thank you everybody for the support, all the awesome questions, and just being part of the Uneducated Economist. I thank you so much. This is what we're here doing. We're trying to figure this stuff out so that we can make the best decisions for ourselves. And when we have these conversations, when we hash out these ideas, when we break down some of the concepts and some of these harder topics, and break it down to make it a little easier for all of us to understand, we start walking through this life with more confidence. We start making better decisions for ourselves. We just end up starting to have a better life. And that's really what the goal of all this is to have a better life, right? Okay, Uneducated Economist, you guys let me know. All right, cheers, you eel. That was all right. You guys are so awesome. I was just reading the last of the comments here. All right. Good night, everybody.